All right, guys. Oh, we got PCE data today. Jobless claims data at 8:30 as well. Market's pulling back some though. What is down so much? All right, so we're still in snow. What's up, Liv? What's up, Robert? All right, guys. So today we got PCE data coming out. That's probably the biggest report we have. Core PCE is the big one. It drops at 8:30 a.m. Eastern Standard Time along with jobless claims numbers. Expectations 0.4%, 2.8% on the year. .4% and 2.8% year over year. Jobless claims expected at 210,000. All right, so PCE data. Let me pull this up. All right, so there's the numbers right there. C3 AI. Where is C3 AI? What are the three biggest reports you watch? Yeah, it's 5:25, Daphne, and I'm in Texas, remember, so it is 5:30 in the morning right now. I haven't even had a sip of coffee yet either. It works out though, because my daughter gets up, she's a teenage girl, right? So she's getting up super early to get ready. And I'm a morning person, so it kind of works out. But yeah, we get up early every morning. But it's early. All right. Yeah. Do you think it'll be bad? I don't know. The market's not down that much today. If we look at here's AMC. AMC didn't really do that much. Here's the SPY. We actually had a pretty big audience for AMC though. It was really weird. We had SPY slightly down today. We had the first 45 minutes of the stream, we had 100 people here, 150 people here. And then after that, right around the closing bell, they all started pouring in here, and we had 1,500 people watching the AMC call with us. So AMC still got a pretty big following, I think. Although optimism. I don't know how big optimism is right now. PC data comes out at 8:30. See, Pawn, but it's like this, bro. You're not getting old, dude. Since you've been working with my channel, you're just changing to my schedule, bro. This is the schedule I've had for the last 10 years, dude. And I've been going to bed early every time. You're just adjusting to my schedule, Pawn. It's a good schedule, though. It's a better schedule. You get up early, you enjoy the day, you know. You finish some of the work before like 10 o'clock, so it works out, dude. Granted, we're both probably getting old. You're probably getting old, just like I am. But you're probably just adjusting to my schedule here. You know, you've been working with me for a year plus now, and so your sleep schedule is probably the same as mine at this point. I try to stay up. My wife wants to watch a movie with me, and I'm like, yeah, I'll watch a movie with you. We get about 20 minutes in, I'm out. You know. Celsius this morning. Let's take a look. Yeah, we do have Celsius earnings. All right, so Celsius. We got Celsius, Best Buy, Canadian Resources. I think Celsius is out already, though. Yeah, Celsius posted 17-cent profit per share, beat 15-cent estimate. Sales of 347.44 million, beat the 331.49 million estimate. So they did beat. There's Celsius's numbers right there. Let's take a look at it. Celsius down a little bit. Celsius has been one of the fastest growing companies. I just don't trust it. This is why I don't trust it. Okay, so y'all might remember before Celsius got really big, there was a company called Bang that did the same thing Celsius did. And they came out. What happened, and honestly, it makes sense, right? Like they used to put something like what is it? What's the workout protein powder you could take? I'm drawing a blank thinking of it. I take it sometimes. Creatine, right? They said super creatine on the bottle. So everybody that was drinking these Bang energy drinks thought they had creatine in them. Eventually, Bang energy drinks got sued by somebody that was upset they didn't actually have creatine. They thought they were taking creatine for a long time by drinking these Bangs, and instead they weren't, and it was just clever marketing, super creatine. And then Bang ended up getting sued. Because false advertisement, and went completely out of business. Like Bang was big. We were drinking it at the gym. And then Bang got sued because they didn't actually have creatine in it. And so you never saw them again. I think Celsius is a huge company. Everybody's drinking them right now. But I think that can change quickly as well. You know, I think that can change. And so I like Celsius. There's vulnerabilities there. I think there's risks. It might pull it off, but I think there's risks. Bitcoin. Yeah, Bitcoin up to almost 65K. Yeah, I don't know. I buy organic stuff, but like I buy organic stuff, but some of it's just so expensive. I mean, we buy it anyway, but still, you know. What's the weather outside right now? It's cold in my house this morning. I gotta turn my heater on. It's 50 degrees. Okay, my heater is on. Bitcoin trying to make runs here. Does Nvidia look like it's making a head and shoulders? I think it's too early to tell. It's too early to tell if it's doing this, Daphne. You know, or if it's doing this. You know what I mean? It's too early to tell that. Like this, there's no gauge. This is just, currently we're in a normal pullback. Like, this is just a normal pullback at this point. It could be forming a head and shoulders. It also could just be pulling back and then running, you know? And so I just think it's way too early to tell. Yeah. I'm assuming that's what you're talking about. If you're talking about something different, let me know. But... 70 degrees down to 35. Yeah, it was cold yesterday. It was for sure cold. Okay, got you. Yeah, I just think that's too early to tell. You know, I think this pullback is normal, but I still think anything could happen. It could be a head and shoulders. I'm not saying it's not. I'm just saying we got the dip, we got the bounce. It could be a Z pattern. You see a Z pattern a lot, A, B, C, D, whatever you want to call them. And it could be something like that. You just never really know, especially with Nvidia, which is just highly volatile, highly volatile. Yeah, SoundHound AI earnings today. I'm in SoundHound. It's moving up a little bit. We'll see if the earnings treat it right. We could get another AI boom and squeeze with earnings today. We'll see. Okay, gotcha, Pawn. Let me put the music. PCE data. All right, let me get the music going here. We get a timer up too. There we go. Let me get the timer up. All right, let me get the music going here. Let me share this. My nose is red today. I don't know if I've been outside a lot, dude. I've been trying to really get some weather outside. The sun feels good, man. I needed some sun. You know, they say that people are more depressed during wintertime. And it makes sense because there's just no freaking sun. So the sun's been out in my part of the world the last few days. So I've been outside playing with the dogs, you know, hanging out and getting some sun. And so I think my nose is a little sunburnt, but that's okay. All right, y'all should be able to hear the music now. ETH just hit 3,500, did it really? Yeah, look at Bitcoin right now. Yeah, ETH. Here's Bitcoin. Bitcoin at 63,000. All right, Bitcoin at 63,000. Remember, the all-time highs on Bitcoin are only about 65K. So it's getting pretty close. If we look at ETH, yeah, ETH over 3,500. Hey, what's up, Beach? Choppy morning. Yeah, I mean, if we look at Nvidia here, Nvidia is kind of the gauge. Nvidia's kind of gotten a little ramp up over the last couple, last few hours. Nvidia has run up and started to test green. Celsius dropped earnings. We have the SPY, which is slightly down here. See the previous closing price way up here. Apple, Tesla. The big ones are, of course, AMC. We also had Mara, crypto stock, dropped yesterday, down surprisingly enough. Maybe it might be an argument for a dip buy, especially with Bitcoin doing so well. We'll see. What else dropped? We had CRM, Salesforce, drop yesterday. We bought that dip, made some money. We had Snow drop yesterday. We bought that dip, made some money. We're still in Snow. Still green, but only slight. They actually make what they call happy lights for seasonal affective disorder. Yeah, I mean, I'm sure that's like a real thing. I love the winter time personally. I think you got to just have family to spend it with, and you got to get out the house. Like even though it's cold and crappy outside, you got to get out the house. You got to get out the house and move. If you don't get out the house and get some sunlight and get vitamin D, you're gonna be all bummed out and sad. You just got to move around. Yeah, it might happen, Daphne. We'll see. Put never went to therapy on my gravestone. All right, guys. Oprah leaving Weight Watchers. Yeah. Vitamin D is good, bro. Yeah, PCE data, very big release, personal consumption expenditure index. It's the Fed's preferred inflation metric. And so, yeah, PCE data, lower is better. Lower means lower inflation. I gotta get one of these things then, man. I need one over here by my work, dude. Let me Amazon the heck out of this thing. You said they're called Happy Lights? Sounds like something from It. I'm assuming it's UV lights. It's got to be UV, huh? Oh, I can get this thing delivered to me today. It's all the same one. See, the problem here, right? The problem that you run into with this type of stuff, dude, is that, okay, so if you look at Alibaba as an example, right? You look at Alibaba. People are selling these lights, you know, on Alibaba wholesale. And so a bunch of Amazon suppliers buy up these lights, right? And they buy up these lights and then they all list them for roughly the same price. I mean, some people are over here trying to rip people off, you know. But like other people are selling them for anywhere between $19 and $70. It's all the same light, same thing, ultimately same thing. And it's basically the same freaking thing here. Same brand even. All right, guys, Nvidia now dipping down a little bit here too. No, I want it freaking today. You advertise today. I want it now. What? All right, sorry. I'm too expressive, I understand. This thing advertised to me same day delivery, and now it's trying to make me pay for it. Here, I don't even need this. Get out of here. I'll buy a LSU tank top later. I need this happy light that's supposed to be here today, but between 5 and 10 p.m. Take my money, you know? No, I don't want to save time and bundle all my boxes together. I want it now. All right, guys. Sorry, I had to order a happy light. We'll see when it gets here. Rip City today. Take garlic vitamins. How important is this data to be released for stocks? It's pretty important. Bro, you lied about checking IOVA. I did lie, Tobbs. I'm sorry. I forgot. It's not that I lied. I just forgot. Here, I got you right now, bro. IOVA right here at $16.30 a share. Not a penny stock. Surprising enough. Not a penny stock. All right, I got you, man. I'm going to make it up for you right now. IOVA, EPS 45 cents, missed the 43 cent estimates. It did post sales of 482K. Fourth quarter loss per share of 45 cents. Fourth quarter loss of 116.4 mil. That is the earnings for IOVA. They said, throughout 2023, and this is quoting them, throughout 2023, we executed toward our first approval and commercial launch while advancing our pipeline. We are seeing healthy demand and momentum for whatever this is. Following the recent U.S. FDA approval and advanced melanoma to expand the launch globally, we plan to submit regulatory dossiers in the European Union in the first half of 24 and in Canada and the UK in the second half of 24. We are also excited about our robust development pipeline across solid tumor cancers. As a fully integrated company, Iovance is well positioned to execute on our regulatory pipeline, manufacturing, and commercial launch activities to advance our mission to remain the global leader in TIL therapy, end quote. Again, their biodrug is Amtagvi. It has to do with skin cancer. So yeah, I mean, looking at the company, this is a biotech company, so it's inherently more risky, but it has had a pretty crazy run. You know, this thing was once a penny stock at about $6 to $8 a share to open the year. Now it's all the way up at $18 a share. If you look at a weekly chart, this thing's been on a nice little comeback since October of last year. So it's been bouncing back. Biotech companies are sometimes like this, where they'll be really weak for years, and then something will pop off with their bio drug, and they'll just start running crazy. That could be going on today. We'll see. But yeah, big move. All right, team. All right, so somebody's asking what's the difference between PCE and CPI. Well, there's a couple differences, like a couple major differences. It has to do with the formula they use, the weight, the scope. Like an example of this, the CPI calculates it using a fixed basket, while PCE calculates it using different data from businesses, revenue, stuff like that. PCE specifically gauges its data from businesses, and CPI sources data from consumers, right? So PCE sources its data from businesses, and CPI sources it from consumers, and so that's the main difference. Again, the Fed likes PCE better, but CPI is a more retail watched metric. So that's the big thing. Like that's the big difference. The relative weight is different. All right, so again, the difference is, I'm reading this article, the difference between CPI and PCE have to do with 4 different effects. Formula. CPI and PCE are constructed from different index number formulas. CPI index is an average based on last price formula, where the PCE index is based on the Fisher ideal formula. A Fisher ideal index is considered a superlative index that it reflects consumer substitution among detailed items as relative prices change. In practice, superlative indexes are difficult to implement in real time because such indexes require expenditure data for the period that is current, and such data are not available. For example, data on household consumer expenditures that are used to estimate the CPI are not available for the current period. For the CPI for urban consumers, a last price index provides an alternative to the Fisher ideal index to estimate a formula effect or differences in the rate of growth between CPI and PCE caused by the differences in formulas. The detailed price and quantity data used to estimate PCE can be re-aggregated with the use of last price index formula. Anyways, point is, there's a lot of differences between PCE and CPI. Ultimately, it comes down to formula, weight, and where they source their data from. In the end, the Fed, who's really who you want to listen to here, likes to look at PCE. They think PCE is a more accurate inflation gauge. This Packers fan just spent $50K of his own money to travel to all 30 NFL stadiums in 30 days, and he won the NFL's most prestigious fan award because of it. All right, guys. Let me catch back up. Good morning, team. What's up, UV? What's up, Kimberly? CPI just lays potato chips. I'm glad to see, you know, the wife is here, pawn. Couples that work together stay together, you know. Carol's going to be coming on some streams pretty soon, too. I gotta bring like Carol on the stream. I mean, listen, to put my honestly, I'm gonna be completely transparent here. Lady traders get so many more views, bro. It's not even arguable. Can y'all even blame me for this? You know, I even had a thumbnail created. Let me show you guys. I even had a thumbnail created. Check it out. You know. Check out my thumbnail that I got created. We're gonna be doing some day trading streams coming up. You know, I don't even think people can blame me for it. I mean, listen, you know. John, legit question: will you ever teach your kids to trade? Probably. My son wants to inherit this channel from me. He talks to me about it all the time. So my son's interested. My daughter could not care less. Yeah, my daughter could not care less at all about any of this stuff. My son is like, YouTube? You got a YouTube channel? What? You got thousands of subscribers? What? Let me inherit that, Dad. I said, hey, look, if you want to, you can. But yeah. Tell your son, pay me? Nah. Dude, females have... Yeah, when streaming, for sure. Yields are probably going to spike if... I mean, I don't know. Yields are only going to spike if the Fed's in the middle of quantitative tightening, which is reducing their balance sheet. You know, the Fed has been more hawkish, certainly, over the last few years since 2020. The Fed was really dovish in 2020. They're not really printing money anymore like that. They're mostly selling off bonds and selling off their balance sheet with direct QT. The Fed even said they don't know when they're going to end QT in the last FOMC meeting. They thought that would be sometime this year, maybe next year. But the Fed's certainly not in a period in which they are expanding their balance sheet in any significant way. And, you know, they don't... Again, that would be if the economy was at risk, that's what they would do. But right now, I think inflation is what's risky and sticky here. So the Fed is taking a more QT, hawkish stance, trying to bring down interest rates to consumers. And again, if you're interested in bonds, you know, bond yields, if the Fed does pivot to more cutting of rates and start, if the Fed does start cutting rates, the impact that it's going to have on bonds is that prices of bonds are going to go up and yields are going to go down, which is one of the natural effects of a more dovish, a more a more dovish Fed. If the Fed is less worried about inflation, but yeah, my son's all into like Preston Plays and like all these other YouTubers. He's a kid, man. I can't get mad. Difference between casinos and trading is that casinos want to take all your money, where brokers want to succeed. Yeah, that's mostly true. Yeah, so they're doing what's called passive QT, which is essentially instead of doing direct QT, which is selling bonds and reducing their balance sheet. They are instead just letting their bonds mature and fall off, right? Which is called passive QT. It's called passive quantitative tightening. Direct quantitative tightening would be them selling bonds directly to reduce their balance sheet. Most of the time, they don't have to do that, though. That's a little bit more of a desperate sign, I would say, to reduce the balance sheet. Most of the time, they can just stop buying bonds, like stop injecting money into, the economy, and in turn, that's going to get the job done versus direct QT, which is actual selling of bonds. It's nuanced, but that's kind of what it is. All right, guys, we got 40 seconds. Can we break 300 viewers in 40 seconds, 30 seconds? Snow's still bouncing up, bro. Again, I think if you guys watched the stream yesterday, one of the things that y'all should realize from this is how powerful, that dip buying strategy is. That dip buying strategy works amazingly well. All right, so will core PCE data come in higher or lower than the 0.4% expected? All right, so we're over 300. There, we beat it. All right, so vote on the poll. Will core PCE data come in higher or low? Let me know. There's the vote. Wait, what was I about to say? Oh yeah, one thing yesterday should show is how powerful these dip buying strategies are, right? Like I got into a couple little scalps, a couple little small trades. And again, this strategy works amazingly well, like amazingly well. Like it just works very, very well. We got in CRM with a quick little scalp with like 10 shares and made like 50 bucks from it or so. We bought it at the bottom, sold immediately on the top. Very small trade. I'll go ahead and show you this. This is just one of them. We also did it on snow. But like, look, we bought it at 279s, immediately sold it at 281s, 286, 285s. And so we scalped it very quickly. And again, I do this all the time. If you watch the stream, you know I do this a lot, right? Every time. Again, it has to be at the right spot. So if you could be patient enough, right? And sometimes doing this, you're going to miss it. But during earnings season, you're going to have companies that do this, right? If you could be patient and wait for like a technical optimistic sign, like deep extension on the breakdown, the likelihood of a bounce back like this is very high. We did this on snow as well. Like we're in snow still, but we're green on it. And again, we did the same thing with snow. We bought it up like way down here and rode it all the way back and took profit on the bounce back. It bounced all the way back up to 190s. So we do this a lot. It works incredibly well. I don't know if I've lost on any examples of this over the last couple months, really. I really don't think I have. If you guys have any examples of this where I didn't make money on, let me know. So buying bonds and artificially bringing yields lower, no implication to inflation. Well, yeah, I mean, there's always going to be, okay, anything that reduces interest rates is going to raise inflation theoretically, right? So anything that brings down interest rates is going to raise inflation. That's the normal cycle of this. It doesn't mean we should never reduce interest rates. Especially at a period of time right now when interest rates are freaking 8%, 9% at one point a few years, like a year ago. The Fed has to be balanced, right? They can't always, and again, I'm right there with you, Digital. The Fed's been in this QT period for a long time now. We only really have to worry about, the Fed's not really buying bonds right now. The Fed is reducing their balance sheet. Buying bonds would signal quantitative easing, right? Quantitative easing is the Fed coming in, buying a bunch of bonds, expanding their balance sheet, and that ultimately brings yields up and the price down of bonds, right? Buying bonds does the opposite of what you're saying, which is increases the Fed's balance sheet and brings yields up and the price of bonds down, right? That's what we've been in for the last few years. Or no, I'm sorry. It does bring yields lower. Sorry, it's super nuanced. I'm thinking about it. It does bring yields lower and the price goes up. But the consequence of a dovish Fed, of quantitative easing, is inflation, right? Like, that's the consequence. But the other side of that is that if you're fearing a recession, that's when the Fed steps in and does QE. And these things they have a lagging effect, especially when you consider how some bonds are long term, right? The reason they're lagging is because bonds take a while to mature. Some bonds take a while to mature, right? And that takes us a while for it to trickle into everything else. And so, yeah, I mean, like, listen, it's kind of something like this where, 2020 happened and the economy started to struggle. And people say, oh, no, the Fed's not doing enough to protect the market. The Fed's not doing enough to help people. What are we going to do? The Fed's not doing enough, guys. And then the Fed comes in and they do stimulus checks and they reduce the federal funds rate and they do quantitative easing, inject money into the market to kind of help save the economy. And then when inflation goes up, people say, oh, guys, the Fed's not doing enough to combat inflation, right? And then what does the Fed do? The last few years, they've been doing quantitative tightening. They've been reducing their balance sheet. They've been raising the federal funds rate, trying to raise interest rates and decrease spending, make inflation go down, and then I'm sure, and inflation has it's slowed down. I'm not going to say it's gone down, but inflation absolutely has slowed down. Without question. If you look at inflation a year and a half ago and you look at it today, it was almost certainly moving faster a year and a half ago. And so inflation has certainly slowed down. And again, I promise you, listen, whenever the Fed starts to pivot and go more dovish and starts cutting rates and bringing interest rates down, then people are going to still be like, yo, inflation, the Fed's not doing enough to help us from inflation. And so you got to understand it's a constant balancing act by the Fed. Nobody is going to be happy no matter what. If inflation is high and the Fed is dovish, they're going to say they're not doing enough for inflation. If the Fed is hawkish and, the economy starts to struggle from it, people are going to say the Fed's not doing enough to save the economy. And so it's a constant balancing act in that regard. Yeah, sorry, quantitative. I always forget that extra T. I'm just going to call it QT. But you're actually correct. You guys know I know what I'm talking about, right? Like, it's super nuanced, but I hope you guys understand what I'm saying. Like, QT is when, just to give you guys a little bit better understanding. So the way this all works, right? Like, why this is important is when the economy is at a struggle, at risk, right? You can look at 2008, you can look at 2020 as examples of this. When the economy is at risk from macroeconomic events, the Fed, and this is a more recent thing, they have a couple tools at their disposal. They could do quantitative easing, which is, again, expanding their balance sheet, buying bonds, injecting money into the economy, right, is what that ultimately does. That basically allows banks to lower interest rates to consumers. It trickles into banks. They can reduce the federal funds rate, which is the interest rate banks charge each other to hold money and loan money overnight. And that eventually trickles into everything else. But it does have kind of a lagging effect, but they can reduce the federal funds rate and bring interest rates down. The easiest way to understand it is that the lower interest rates are, and this includes mortgages and everything else, the more the consumer has to spend on other things, thus stimulating the economy, right? So if interest rates are super freaking low and it doesn't cost a lot to get a mortgage, what is people going to do? People are going to buy more houses. They're going to have more free spending money because instead of paying freaking $5K a month in a mortgage, they're paying $2K a month. They've got more wiggle room now and they can spend the rest of that money more freely. It causes spending. That is what quantitative easing does, is it causes more spending. That's the theory of it, right? Same thing, reducing the federal funds rate, same thing, similar thing. The Fed injecting money into the economy, similar thing, gives banks more wiggle room, and all this different stuff. That is quantitative easing, but one of the consequences of that is inflation. When people spend more, prices go up, right? So people spend a lot of money on other things. Rolex has appreciated 100% or more over the last 3 years. Bernard Arnault, one of the richest guys in the world now, the owner of Louis Vuitton, Hennessy, all these luxury goods, right? The prices have gone up dramatically since 2020. That's a consequence of quantitative easing and money printing and injecting that money into the economy. And so now the Fed has to kind of play the other side of it, which is they have to reduce their balance sheet in what's called, most of the time, again, it's called quantitative tightening, passive quantitative tightening. So instead of directly selling their balance sheet off in the bonds in their balance sheet, that is, they are instead just allowing them to mature and run off their balance sheet naturally. They can also raise the federal funds rate, which ultimately causes banks eventually to raise interest rates to consumers. And when consumers have less money, when they're paying more in mortgages and other interest rates, what happens? They spend less because they have less. They have less wiggle room. If you're paying $5K in a mortgage versus $2K, you're going to have less money outside of that to spend on other things. It trickles into the rest of the economy. And so that's kind of the nature of all this in the Fed. That's what they're doing, and they got to play both sides, and it's not easy. And I think considering how bad it could have gotten in 08, I think the market and the economy bounced back pretty quickly from it. I think same thing with 2020 to a certain extent, although there were a couple hard years. Today is very different. We are almost spending more on interest than on defense. It's not sustainable. The market is putting all their bets on back to quantitative easing era. Is not going to happen. I think we're going to pivot to rate cuts. I don't know if the Fed's going to do quantitative easing. I know they're almost certainly going to cut rates this year. So I think they're almost certainly going to cut rates this year. All right. Somebody's been watching The Big Short. Easy, Mike. I see you, bro. I see you. I know what you're doing. So what he's talking about, Ninja, which is no income, no job. Mortgages. They don't really do stuff like that anymore. It's not really becoming like that. It's much harder. Okay, so to put this into perspective, right? Leading up to 2007, 2008, it was a very similar thing to 2020 consequences in that interest rates were very low. We were coming off of the dot-com crash. Interest rates were really low. Mortgages were running rampant. Everybody was getting a mortgage. The restrictions on mortgages were not very high. Mortgages were getting handed out way too easily. Was the dynamic of 2008. Investors were speculating on all these different things in mortgages. They would have collateralized debt obligations, what's called CDOs. They would have all these different things that investors were speculating on, and then it just caused this massive mortgage bubble where people were getting mortgages that shouldn't have. People were speculating on mortgages in super risky ways and betting more valuable things on it, and ultimately that top ended up falling down and destroying the mortgage market after 2008. And again, a very similar thing to 2020. What the Fed did at that time is they reduced the federal funds rate. They did at the time quantitative easing. They injected money into the market. They injected money into the economy through quantitative easing, in which they went up and bought a bunch of bonds and brought interest rates down to almost zero, right? Almost zero after the big crazy crash for mortgages. And so, yeah, and again, very similar thing. One of the consequences to that was inflation. And so, but the market, it tended to work in 2008. The market rebounded very quickly. If you look at 2008 here, and you put up the SPY, or let's put up the S&P. Here's 2008 back here. And I actually lived through this. I remember it. This is when it got me interested in economics. Here's 2008. But we rebounded from 2008. Like, we hit lows of about 700. We were all the way back up to almost where we were before within 3 or 4 years. You know, so like definitely a big crash. Once we started breaking those previous highs, you can see how crazy the market went afterwards, right? The market in the 2010s was very, very strong. Very, very strong. And we haven't really had a major correction since. And so in terms of probabilities, you know, maybe we're getting up there where it's time for us to have another major correction. I don't know. I think it's possible. But yeah, interesting time right now. We'll see. Maybe the AI boom is going to cause a crash. I don't know. Yeah, the PC is going to impact the market heavily. Hey, that's crazy, Easy Mike, yeah. Big Short, that movie is really what got me interested in economics, in the stock market, right? Like, I went and saw the movie The Big Short in theaters when it first came out, and I was completely oblivious to anything markets, didn't understand it. And again, I think it was my natural place, because I think I have, like, I'm not trying to brag here, so, you know, people on the internet sometimes get weird no matter what, but, like, I think things that I'm naturally good at is analytics. I think I analyze things well. I'm very skeptical as a person. I have a lot of skepticism, and so I think that fits well with stocks and trading. And I like to play strategy games, you know, and poker. And so I think all of those things combined make me gravitate towards stock markets. And just markets in general. I think we'll see a small pullback in Q1, a larger pullback in 3 with rate cuts, and then in the year green. Maybe. We'll see. When do y'all think they'll cut rates? Looking at our poll numbers, 66%. I don't know, man. I don't want to meet up, dude. Or sorry, yeah, Kimberly. I don't want to meet up. Meeting up's too scary. You can ask your husband, man. Too many freaking weirdos on the internet, man. Too many freaking weirdos. And I've had a lot of them, dude. I've had ones where I got people creating fake accounts after fake accounts, like criticizing me in one account, and then when I react negatively, go into the other account and be like, hey, you should ignore the haters, bro. What are you doing? Like, trying to hit both sides, obsessively creating accounts. You know, people get freaking weird. People get freaking weird. And so I would get very nervous announcing where I'm going to be, you know. The internet's a weird place. Yeah, there's been some weird people. Haters are hating on the haters. People are weird like that. Yeah, dude, people are just strange, man. I think what it starts off as is idealization, right? Like, I think people want to do, like, I think there's a lot of people that want to stream like this. And so they tried and they fail, right? And so what happens when they tried and they fail is they end up, like, kind of going to anybody that did it and succeeded and getting kind of weird with them. Like, they'll probably never admit it to themselves, right? But, like, the reality is they're getting weird with them because they're doing something that they couldn't do. And I think over time that just kind of makes people weird, obsessive, and haters. You know, I always try to say the same thing. Like, failed YouTube channels are the biggest haters you've ever seen, you know. Like, it's not just one person. Like, I've had multiple different people who, like, they're big haters, and you can see they're obviously just sitting around waiting to disagree. And when you go to their channel, it's like they tried to upload a bunch of videos, didn't work out, and now they just turned into a hater. It's just, people are strange, man. I think it has to do with, like, misery loves company. Yeah, we still got a minute and 10 seconds. We got 400 people here already. Still more banks? Maybe. Bro, market is going against the reality. Just admit it. I mean, Kra, what you're getting wrong, sir, is that there is no reality, bro. Like, the fact that you think there's a reality shows me that you don't understand the stock market, brother. Like, it's not supposed to do anything. This is based off of mass psychology. It always has been. And so it's not based off of company fundamental health. Like, that influences it, sure, but it's certainly not based off of purely company health. Like, it's based off of the perception of health, and that can be good or bad, overreactions, underreactions. Again, typically bears who bet against the market always say the same thing. They're saying, well, the market's not supposed to be doing this. The market's not supposed to do anything. It can and will do whatever, and history has shown that to be true. And so you got to stop thinking about it in terms of right or wrong or correct or not correct movement. None of it, like, just because it goes against you doesn't mean it's wrong. And nobody cries manipulation more than somebody that's been wildly wrong about the direction of the stock market. You know, but that's been true throughout history. And so, again, it doesn't have to do anything. It's the stock market, brother. It can go up, down, sideways. It doesn't mean it's right or wrong. It doesn't mean it's correct or not correct movement, you know. Was the market reaction of SNOW an overreaction in your opinion? I ended up buying the dip right now, but I'm in snow currently. So I ended up buying the dip of snow, and I took profit already mostly. So I'm in a small piece. I'm green about, I mean, I bought, I don't know how many shares I bought. I bought Snowflake. My average price right now is 173s. So I got almost in right at the lows. Very happy with that entry. 173.25 is my actual entry for snow. It's currently at almost 180s. And this is a small piece. We've already taken profit. And so I don't know if it's an overreaction or not. I know typically after big downward pressure like this, we get bounce backs, usually. Right here, Sky, you can see it all. We cover all that stuff right here. Yeah, I mean, F350, again, opinions, like, again, I'm probably the most honest about everything. You know, I post this multiple times a day. Remember, I am terrible at this stuff and have no idea what I'm talking about. Not an investment professional. I'm not liable if you lose, and I might be wildly wrong about anything and everything I say. Again, you can look at the bottom of the screen, the scroller at the bottom of the screen as well, right? In the end, no offense, but you're probably just bearish and mad that I'm not saying bearish things, F350. What I would advise you to do, bro, is to be less emotional, man. To be less emotional. Everybody can have an opinion. We might have the right opinion, the wrong opinion in your mind, but it doesn't mean it's right or wrong, actually. In the end, I didn't really say anything except the stock market doesn't have to do anything, and I think time has shown that to be true. And so if that statement made you hella emotional, again, you're probably trading too large and you're really extended in positions, and so kind of upset the market's been pushing up. Regardless of what it is, I wish you the best. Good luck, bro. But yeah, dude, I can give my opinions on what I think will happen, what I think the market is in. I don't have to be an advisor, licensed advisor to do that. That's silly. Now, if I was telling people to do anything, that's different, but obviously I'm not. He's bearish, Jared. Yeah, imagine a country where you couldn't give your opinion unless you're licensed. Definitely top 3. Hey, what's up, James? My guy. Thanks, brother. I agree with yours except for Mary Jane. Oh, cannabis. Listen, bro. Cannabis should be legal, right? Regardless of whether you disagree with it or not. The question is, do you agree with alcohol? Do you think alcohol should be legal? Alcohol, regardless of what anybody wants to say, is an objectively more harmful drug. And it is certainly a drug, right? It causes massive, health problems, massive problems in society. Ultimately is terrible for people. People get addicted to it. If they try to stop, they get sick. Physical withdrawal symptoms from alcohol. Yet it's sold at gas stations across the country. I'm not saying cannabis is great. What I'm saying is there should be at least an even standard of legalization for things across the country. And I think most people can, agree with that. People are going to consume it regardless. Even if you don't want, people to consume it, they're going to consume it regardless. And so those people can either go to a licensed safe dispensary or they can go to sketchy people on the street, right? Either way, they're going to consume it regardless of that, and regardless of its legalization status. And I think cannabis, we have cannabinoid receptors in our brain, and so human beings have consumed cannabis. Our ancient ancestors certainly consumed it. We have receptors for it in our brain, and so I think when you look at all those things, I think there's just been a lot of negative propaganda about it throughout the last century, but I think people are starting to wake up to it. And again, I'm not even somebody that uses it. Again, I'm married with kids. I'm not saying I've never done it. I was always too paranoid to really do it. But regardless, I think we should legalize it and tax it. And I think that's obvious. Tesla? Yeah, I know so many people that just destroyed their lives from alcohol, bro. Like, I know adults where, like, they've tried to be my friends, and every time I see them, they're drinking. And again, that's fine if it's some of the time, but if every time I'm seeing you, you're trying to have a drink, and it's to the point where you're not functional. Like, you're just not functional. You're making bad decisions, bad business decisions, bad decisions in general. It just tears people up, man. I've had family that have struggled with it as well. I just avoid it, man. I've never been. And again, I'm not judging you. Do whatever you got to do as long as you can be functional. But yeah. I am bearish. Yeah, and again, to be fair, guys, I stopped buying up most stocks over the last 3 weeks. And so people acting like I'm super bullish just is emotion. Like, they're just emotional, right? Like, I've stopped buying most stocks over the last 3 weeks. I've been very open about that on my stream. It's not like I've been buying up everything, being like, yeah, bull market run. Like, I hope the market goes up because I'm still holding like about $10,000 in positions, but it's not a huge position list by any means relative to what I normally take. And again, I agree. I think the market in tech is too extended right now. I need a correction back down, and and then maybe we'll start buying stuff up. But yeah, that's kind of where I am right now. So again, people acting like I'm hella bullish are usually just really extended in short positions and upset about it. Yeah, all things in moderation, 100%. Texas, Phantom. Yeah, like I've got a bunch of close friends that I grew up with. It's hard making friends outside of that as an adult. It really is, bro. Like most of the time I just can't trust people's intentions. Like most of the time they want to be my friend once they hear about business or something like that, and all of a sudden, like, and their agenda is just so transparent. It's hard to be their friend, you know. Like and again, some of them, like I knew some people who were like mortgage people, right? And this is in the middle of interest rates going crazy. And so what happens when interest rates are up like they are? People stop buying houses, man. They stop buying houses. They stop getting mortgages. So it killed a lot of their business. And I think I've had a couple people that were like this, where they were struggling to do business. Like they come to my house, like they see my house, they see my different businesses, and immediately, and if they're struggling in like mortgages or they're struggling in like real estate, they just kind of try to latch on, right? They just try to latch on, and you know, they would do certain things to try to weasel their way in, you know. Like I had one guy send me a bunch of fake views, and a bunch of bots. He would create fake accounts and be like, hey, you know, you should let Bill on the stream. Bill should be your co-host. John sucks. Bill is great. Bring Bill on the stream. And it was just so artificial. It was weird. And so, yeah, people are just weasels, man. It's hard to trust people. You know what I mean? And so the only friends that I have, I think Drake was telling the truth when he said no new friends, because you just can't freaking trust them, bro. You just can't trust new people. You know, my best friend in the world, I tried to work with him in business. I wanted to work with him. I wanted to build different things with him. He doesn't want to do business with me at all, even though I'm willing to like fund the businesses. And his reasoning behind it is like, look, businesses destroy friendships, and they absolutely do. They absolutely do. And so I can respect that even more, because they really do. Business gets weird, man. Business gets weird. I was going to get involved with another business. I was going to help like fund a business. But the guy I was getting involved with was like super young. And, you know, I remember myself at his age. I was just a bad decision maker. I just wasn't making good decisions when I was young, in my early 20s. And so I didn't end up getting involved in the business because I just don't trust young people like that. If you're 18, 19... I don't really want to get in business with you. It's just hard to trust. Yeah, never mix friends in business, 100%. Yeah, for sure, Tech. Yeah, I never lend friends money at all, bro. I'll give them money if they need it. But I'm not about to lend them money, because lending money is just a recipe for disappointment. You know what I mean? But anyways. You know, the crazy thing is, like, you got people like that. I had another guy that I just freaking met, right? Like, I just met this dude. I had known him for like 2 weeks, had probably met him in person like 3 times, right? Again, he saw my house. And he immediately, like almost immediately wants to be like, hey, we're besties. We're best buds, right? And I'm sitting there being like, bro, you're not my best friend. You know, like, what are you talking about? He started saying, love you, bro, at the end of it. I'm sitting there like, dude, I've met you 3 freaking times, bro. 3 times. You know what I mean? Like, and again, when I see that from somebody, I immediately just kind of, you know, like, I don't trust you, dude. Get away from me, bro. like, you're not my best friend, man. Like, why are you saying this stuff? Like, you're too rushing it. Like, rushing it too much. Yeah, it was off, bro. Again, it just makes me pull back. Like, I question people's agendas. How do you feel about DraftKings? I like DraftKings as a company. I think it could be a little extended. I think the time to get in DraftKings was like... The time to get in DraftKings was at the beginning, like a year ago, when it was at $17. I think up here at $42, based off of how much it makes. It's a thriving company. It's doing really well. But I think it's a little extended on the upside with a lot of things right now. Right, so if we look at DraftKings EPS graph here, so basically their margins, their profitability, they're starting to get better, right? And eventually DraftKings is going to turn a profit. And so you can see their EPS, their margins, getting better and better and better. When did their earnings come out? Loss of 61 cents was last time. In May. Okay, so their earnings just dropped. So 61-cent loss per share. DraftKings to buy Jack Pocket for $750 million. They acquired another company recently. All right, and DraftKings fourth quarter results actually came in positive. So this is a little bit delayed. So they actually just started showing a profit. Fourth quarter sales came in at $1.23 billion. Fourth quarter adjusted EPS came in at 29 cents versus 8 cents estimate. So DraftKings now doing much better, and their chart looks like it too. So again, they're finally showing a profit. Let's look at their revenue. But again, they're just too high up for me right now. All right, so again, we go to the DraftKings revenue graph. All right, so here's DraftKings. You can see their revenue increasing over time as well. Their revenue way up there. And so DraftKings, again, I think they're going to be big name in sports. And I think they already are. But extension-wise, they're up a little bit too much for my taste here. Nvidia trying to go green on the day. Let's look at the SPY. The SPY is still up there. We do have PCE inflation data dropping in about an hour. We're at 505s here on the SPY. We can look at the Q. Q's a little bit more green, but still red on the day overall. Has anyone ever used that rent-a-car service from other people? I haven't. The problem with that business, right? Like, I hear a lot of like wannabe financial gurus out here being like, yo, you could buy a luxury car, bro, and just rent it out to people and earn cash every month renting out your car. There's a huge flaw in that business model. You know what the flaw is? People do not treat rental cars well, right? You buy a Lambo for $200K, you start renting that thing out, bro. That thing's whole motor could be blown within a year from people just ragging that thing out. And insurance ain't gonna cover it in that way either. And so, again, people treat rental cars terribly. And so renting out your car every freaking month just to earn a couple $100 is going to destroy that car. Like, you're going to lose that car. Like, that car is going to go massively down in value because it's just going to get beat up over time. Because, again, people do not treat rental cars well. I'm not saying I didn't, but I know people, they don't treat rental cars well. And so renting out that type of car just for cash flow, again, any money you make is going to have to be spent on repairs over time from just, you know, the car getting beat up over time. Yeah, that's the issue with Turo and other rental apps, in my opinion, you know. Only maybe if you have like a luxury SUV, right? A luxury SUV that's not fast. That's the only one I would do. I would do like a luxury SUV that's not quick. Not in the same way, Johnny. Like, again, if you have a supercar, right? When you go out, you're going to be speeding around sometimes, especially when you first get it. But after you have it for a while, you're not going to be driving it as crazy, you know? If you're renting a car, though, you got a couple days, you're going to get your day's worth. You know, it's just going to beat up the car quickly. It's just, again, any money you make is going to be paid back in repairs, in my opinion. Yeah, you'd have to buy, like, again, an SUV. Buy, like, a G-Wagon, you know? Yeah, I don't know what happened, dude. My whole stream just cut out, but we're here. We're back. I don't know what happened, but we're here, guys. For whatever reason, StreamYard just cut out on me. We're back, though. Someone shorted your camera. I mean, we're here. We got it up pretty quick. It might have cut out for like, what, 3 seconds, guys? How long did that cut out? Someone teleport you? I can teleport. You want to see it? Watch this. Ready? Hold on, wait. Watch me teleport. Ready? There we go. Teleported. Look at that skill right there. Look at that. I'm gonna go back down now. Alright, there we go. Done. You guessed the PCE right. I got a couple times, got it right. I had a rental car business back in the early 2000s. We had to rotate our cars so often it wasn't funny due to how bad they were driven. Yeah, I mean, you got to think, like, again, I think a lot of people want to be financial advisors, right? And they're out here telling people to start a rental car business from Turo and stuff. But again, the massive flaw is they forget how people treat rentals. Like, I don't want to buy a Lamborghini and then rent that thing out every other week and have it just get destroyed. The scary part of that business model, again, is that motor problems are not super transparent all the time. And so if you start getting knocks in your motor and stuff like that from people just aggressively driving your car 24/7, it's not going to be as obvious. And so the people might return the car and then the motor starts knocking a week later. And then you're not going to be able to go to them for liability. You know, you're going to have to fit the bill yourself. And the likelihood that you're going to make enough from that to pay for the motor swap and all that stuff is very low. It's just not going to work, right? Like, people just, in the end, people just want to make content. They want to make content. They want to be business gurus. And so they start telling people to rent their car with Turo, but they don't think about it deeply enough. And people are desperate to earn cash flow, and they think they find all these hacks and stuff like that. So they end up, confirmation bias is strong. If you want something to be true, you'll believe it. And so I think people believe it's a viable business, but they're going to learn. Hey, good luck, Todd. Todd, are you the Todd that I have on my Facebook or a different Todd, bro? Hola, mi amigo. ¿Cómo está? Alright, guys, we almost got 600 people here already. Different? Okay, gotcha. What companies do you think are overbought right now? I mean, a lot of tech stocks probably a little too high for me and my taste. Yo soy fantástico, Alberto. What about EV rentals, Tesla Plaid? Yeah, maybe, but EV motors are even more expensive than regular motors, brother. If data comes in higher, will it drop the markets? Probably. But we don't know for sure. I get bombarded with bot friend requests on Facebook. Yeah, I mean, the ones that are the most predatory are like the pretty girls that send you friend requests, right? They're like, hey, what's up? They put like a really skimpily dressed lady in the profile picture. And again, this is how catfishes are made, right? And people are so lonely sometimes, they're more likely to believe they're real. So if you're lonely and you're, maybe a little bit senile, they get old people a lot, right? So you're more likely to believe that this is a real person. Confirmation bias is such a strong thing. Anywhere you look, it's such a strong thing. And so if you're lonely and single and a pretty girl messages you and they're like, hey, what's up? You might be like, oh man, I got this pretty girl messaging me. But they're almost certainly a dude overseas, somewhere trying to get you to send them money is almost certainly what it is. It'll probably affect everything. Yeah, my daughter and I, like, one of the things that I trained my daughter on is Catfish, right? Like my daughter and I's favorite show for years was Catfish. And it's really important for her because she understands. And I always told her, look, if some handsome dude sends you a message and he's like, sup, like come meet up with me, never freaking go meet up with him. You know, never. You don't know who it is. It could be some 60-year-old dude named Bob. Like, do not go meet up with him. And again, watching Catfish and watching what they pretend to be versus who they actually are at the end has shown my kids you can't trust anybody on the internet. You know, even on my live stream, right? People create fake accounts. They try to pretend to be other people. People are just weird, man. They have too much free time. They don't have much going on in their life. Again, what I'll say to anybody that's like that is, listen, you're not going to be fulfilled acting like that on my YouTube channel or anywhere, really. Like, spend time focusing on yourself. Like, if you recognize that you're doing that, you're wasting your life away doing dumb stuff out of insecurity. Like, you know? If PCE increases, that mean economy doing well, or is it doing bad? That's more nuanced. PCE is spending, and so inflation gauge. It stands for the personal consumption expenditure. So in that regard, it might mean the economy is doing stronger, but inflation is getting worse. So it depends, right? PCE does signal more spending, and so higher PCE signals more spending, but ultimately more inflation, and inflation is seen as a negative right now. So it's almost certainly going to be something in which the higher it shows up, the worse the market will react, and vice versa. The lower it shows up, the better the market will react. Lower is better. It means lower inflation. All right, so we still got 45 minutes before data comes out. 45 minutes. And then today we have SoundHound AI dropping. Netflix has been one of the strongest stocks. Let's see if that continues as well. Yeah, Money Mitch at Benzinga, like him and I used to work together. He told me to buy Bitcoin at $3,500. I still remember it to this day. This was like 6 or 7 years ago. Like him and I were covering it, and Bitcoin had run up to like 10K and then dipped all the way down to $3,500. And he was like, "Hey, I think you should buy the dip." And I never did, and I felt bad now in hindsight. I wish I would have bought that dip. Bitcoin in the stock market. Somebody's saying, see, I think this is the problem though, is like somebody's saying Bitcoin and the stock market are pumping harder than during quantitative easing, infinity, and zero rates. There must be some type of backdoor quantitative easing that is injecting massive amounts of liquidity into the system, and a restrictive monetary policy. This is not possible. It is possible. The reason it's possible is because you have to take a look at heavily weighted tech stocks right now and what's going on there outside of monetary policy. Guys, stock market and the economy are not the same thing. They're not the same thing. Okay? The other thing is that quantitative easing is a relatively new thing. This is not something we've been doing for a century. This is a relatively new thing that the Fed is doing. And so acting like something is impossible versus a relatively new theory type of thing shows a, again, the difference is right now Nvidia and other tech stocks with AI. We're in the middle of an AI tech boom, okay? And so regardless of the economy of the Fed and regardless of interest rates and bonds, equities are going to move with sectors, and the sector that's propping the market up over the last year has been AI. AI microchips have been booming. It's been a completely new sector of the market, running, going crazy. That is what's saving the market during a period of quantitative tightening and QT and high interest rates and a hawkish Fed. You know, the economy and stocks are different. They're not the same thing. Year over year is what YOY means, year over year. What's the long-term issues for Apple? I couldn't imagine Apple has issues long-term. Again, Apple, I'll tell you what Apple has done incredibly well. Apple has made it cool to own Apple products. Again, I've got a 14-year-old kid. I could buy her the newest double screen Samsung phone right now and bring it to her and give it to her, and she would never use it. You know why? Is because it's not cool. Young people don't think it's cool. At least here in the US, young people want Apple. If you're in a group chat, having a Samsung will make you different, and young people don't want to be different. They want to fit in. That's something Apple has done incredibly well and been very strategic around. And so, in the end, I think Apple's going to be fine long term. I think they have the younger generations on lock, at least here in the U.S. Outside of the U.S., it's a little bit different. But in the U.S., I think people outside the U.S. might not understand this as well. But almost everybody has Apple here. Nobody has Samsung. I have a Samsung, you know. So, again, I've got a Samsung. I got the Z Fold. But, you know, I'm an outlier for sure. I mean, I understand monetary policy, T. You know what I mean? Like, again, you have to understand it goes by swings. You can look at the stock market, but you also have to understand, in theory, yes, in periods of Fed restriction and QT and hawkish Fed, in theory, the stock market should go down, right? But sometimes in that way, the market's not always sensical. And again, you have to understand the difference. Like right now, we're in this period of time in which the Fed is hawkish, interest rates are high, inflation is high. We're in this type of market right now because of 2020. You know, 2020, the pandemic happened, people stopped working, the Fed had to try to save the economy. And so they cut rates, they did what was called quantitative easing, which they bought a bunch of bonds, expanded their balance sheet, brought interest rates down to almost zero. This allowed consumers to spend more. Stimulus checks were sent out as well, ultimately all contributing to more spending, right? And one of the consequences of that quantitative easing, that injecting liquidity into the economy, is more spending. When people have to pay less in mortgages and interest rates overall, they have more money to spend on other things, and that causes inflation bounces. You know, you see Louis Vuitton, Rolex prices are all sky high today because of 2020 and beyond. And so one of the consequences is inflation. People spend a lot more. When people spend a lot more and prices go up, that's the natural consequence of it. And then the Fed has to play the other side of that, which is what we're in now, which is, you know, instead of injecting money into the economy through quantitative easing, we are now doing the same thing with quantitative tightening, but the opposite, with quantitative tightening, which is reducing the Fed's balance sheet, which is what's called passive QT, letting the Fed's bond holdings mature and expire and roll off their balance sheet. raising the federal funds rate, which is raising interest rates to consumers, and all these things should contribute to less spending overall. But one of the things that's happening in this period has been AI and Nvidia stocks are going crazy. That's what's ultimately propping up the market right now and making the market bullish, even in a period of quantitative tightening. So again, I think sometimes the economy and markets do different things. They don't always have to agree with each other in that way, especially in periods of time where we're having booms in tech, right? Like we have Nvidia, we have Microsoft, AMD, AI, microchip stocks, Meta, just booming from these different techs and the contributing revenue that we've gotten from AI in these companies, right? So again, it's not always the same thing. With that said, Nvidia ramping up to 780s right now. Volume's starting to show up. Let's see if the SPY follows it. I'm in SoundHound. We're going to cover earnings this evening. Next Fed meeting is March 21st or 20th. We also have jobless claims today as well. Nice analysis, I understand. So if tech falls, it will be catastrophic. Well, it depends on how much it falls. I agree that Nvidia and tech are up way too much. PE ratios are high, and they're propping up the market. I agree. Listen, again, people act like I'm just some perma-bull that's always bullish. I stopped buying stuff. I sold off a lot of my portfolio over the last 3 weeks because I don't trust the market right now. I don't know how long this can sustain. And so I agree, tech stocks extended on the upside. I agree. But it doesn't matter right now because we're in the period of a parabolic run in Nvidia and other tech, right? So I agree we're extended. I agree it needs to pull back, but I don't agree that it has to pull back. Okay, that's the difference. And I think that's what people have to understand is that the market doesn't have to do anything. It all has to do with how many people start buying Nvidia up, how many people are optimistic. The market has to do with mass psychology. That's why what the Fed does to influence interest rates in the economy is different than the stock market, because they're different. Now, they might, over a macro sense, play out in predictable ways, but it doesn't mean it has to do anything. And again, I agree, Nvidia too high. I'm not buying it right now. And again, during Nvidia earnings, we were covering it. We had 14,000 people, concurrent viewers watching. And so we cover Nvidia a lot. Again, I agree it's extended, but it doesn't mean it has to pull back is the difference. And again, when you start to understand that and you start having it has to do something mindset, you start to be a little bit better of traders. Because again, I think you should never be so extended in any position that you're super emotional if it doesn't work out. You know what I mean? Like if you're super emotional, like going from room to room upset, again, it usually means you're gambling a little bit. You're too extended. Is it even possible for us to beat PCE and jobless claims? So jobless claims is unemployment filings. And so lower on each one, like a lower jobless claims means less people filing for unemployment. But in that regard, with the inflation spending, anything that contributes to inflation right now is bad, and that means spending. So anything that signals more spending is a negative thing in market terms right now. I think if jobless claims come in higher, the market might respond better because of inflation problems. But it also, again, the interesting thing is today we have jobless claims and PCE inflation data coming out at the same time. And so what PCE does might signal how the market reacts to jobless claims. And yeah, jobless claims expected at 210. Going from room to room upset. Yeah, you'd be surprised at how many people do that. All right, guys, we got 750 people here, team. We'll have over 2,000 people here during PCE data in about 40 minutes. Nvidia now dipping down to 780s right now. 780. SPY at 505s. We got the Q at 435s. Yeah, my channel's been on a fun like growth phase, bro. We've been growing so fast lately, like so quickly. Like our big economic streams have been getting so many views. It's been fun. It really has. Shout out to Pawn for helping me grow it. Yeah, historically, election years aren't bad. You know, the politicians want the market to do well. And so, historically, election years are okay. Doesn't mean it has to happen or it's going to happen, but historically, yes. I think so, Flowers. He said, so PC coming in lower and jobless claims coming in high might get the best reaction. I think so. Both of those things signal less inflation problems. And so, again, less people working is what the Fed ultimately wants and less spending, right? The Fed wants less spending right now. And so more people working means what? More spending. You know, so less people working in that regard means less spending, right? Higher jobless claims might be an optimistic, positive thing for markets. We've seen that a lot over the last few years, although it's never 100% definitive in terms of like the reaction like that. But it is, we do get that reaction a lot, which is more spending is bad, so higher jobless claims numbers is good. And PCE data, again, core PCE is the most important one. It's expected at 0.4% month over month and 2.8% year over year. That data is relevant as well, of course, with inflation. Core is the biggest one. Core PCE drops at 8:30 Eastern Standard Time. All right, guys. Again, Palantir is still moving up. Nvidia, I kind of want to buy this dip short term, but with these economic data coming out, I don't trust it. What do you think will happen in 30 minutes? It depends on what the data shows up as. Also, we are going to throw this thing in sub-only mode. So we're in sub-only mode, guys. So if you haven't already subscribed, hit the notification bell. I appreciate it. This is the best place to be in the morning. Nice and relaxing with lots of info. Hey, thank you, Mark. Shout out to Mark. I appreciate the love. Everybody always talks about how fast I type, dude. Top 3 fastest typers in the world right now. I think I'm getting better, though. I really do. All right, look. You guys ready? All right. Ah, fingerprints, dude. I'm not going to do good. They're hitting me with all these big words. I give up, man. Yeah, I give up, dude. Honestly, they hit me with too many freaking weird words. I'd have to do another one. But yeah, they hit me with all these huge freaking words, man. Dinosaurs. You know? What do you guys think that was? How many words per minute? All right, we're at 799 here. All right, so this was 83 words per minute. 83 words per minute. My fastest was 93 last year in February. So my best would probably be about 100 words per minute. Yeah, dude, I'm super slow typing, bro. I can't type at all, dude. 100 words per minute. Ugh, chump change, man. You know? You know what I'm saying? Yeah, it was 83. Forward guidance for Celsius, I'm not sure. Make the SQQQ. Yeah, dinosaur, bro. They hit me with that word like 3 times, dude. So I don't, again, we talked about this earlier. There was a company called Bang Energy Drinks. They came out with super creatine on the bottle, and they got sued, and it took them down completely because they got sued for false advertisements for saying they had creatine in them when really they didn't. They just had super creatine as a marketing purpose, right? This is a company called Bang Energy Drinks. They went out of business. I think Celsius is much bigger. A lot of people drink it. It's definitely more ingrained in our society, but I think there's also vulnerabilities for companies like that through competition. But I think Celsius is going to be fine. Palantir just broke over highs. So look at Palantir on the right chart, up to 2440s. 2440s. Yeah, I mean, you look like you would drink a Bang, Kyle. Celsius just has a class action lawsuit. Don't know if it matters. Yeah, I gotta bookmark that website. 176.04. They have so much caffeine in those drinks, dude. I'd rather just drink coffee. GSAT, dude. It's been so long since I've seen GSAT. Barcoding looks terrible. What does GSAT even do? I've heard about this company for freaking years. Yeah, 300 milligrams of caffeine is just too much, bro. It's too much. I just drink coffee. Coffee is actually somewhat good for you if you don't put a bunch of sugar in it. It's pretty good for you. It's not bad for you in that way, I guess. Coffee's bad because people put so much sugar and nonsense in them. Especially if it's the first thing you're drinking when you wake up in the morning. Like if you're going to Starbucks and getting like 50 milligrams of sugar in a cup of coffee for the first thing in the morning, that's terrible for you. Just terrible for you. But, and again, you guys should like the bitterness. I drink coffee plain. I don't drink it. I don't put any sugar or anything in coffee. The bitterness is what wakes you up, gets you hyper, you know, allows you to get stuff done. Picasso's second most valuable painting sold at an auction for $139 million. What's the volatility of a piece like that, though? It's got to be crazy high, no? Like, the volatility of a piece like that has got to be ridiculous. It's not actual creatine though, guys. Yeah. Boba too? Yeah, freaking dude, trust me, I've got a wife and daughter. Freaking boba. Look at Palantir rip up. Alright guys, we got about 900 people here live here. We still got over 20 minutes left. Palantir AI rip it up. What about SoundHound? SoundHound does have AI dropping, or earnings dropping today. So SoundHound drops earnings this evening. I am in SoundHound as well. Mara had earnings yesterday too. They're starting to bounce back a little bit. They're all kind of based off of Bitcoin price for the most part. Although Bitcoin price is flying up, almost hit 65,000 over the last 24 hours. What is WBD? Warner Bros? Yeah, I don't like any TV, studio TV company right now. I think movie theaters, studios, and TV are struggles, especially TV brands. And so I think movies in general are being less produced. They're taking less risks, and ultimately their margins are going down. And so I don't like any of these companies. Although there might be an argument for a dip buy. Warner Bros is down to 870s, so there might be an argument for a dip, but it would have to be a trade in which I just took such small size. I'm not worried about it if it's wrong. You know what I mean? I think that's the only way to really take that type of trade. Yeah, I bought Snow on the dip. My average price is 173 something. So it's almost a 180. So like I bought Snow on the dip, rode it on the bounce back to almost 190, took profit, and now I'm sitting on a very small trade that I'm still green in. Surely, but there's a gap from 2007. I'm eyeing that around $7 to $8. Yeah, again, that's kind of what I'm looking at. Again, it could be an extension play. I don't think Warner Bros is going to go out of business, and they're down deep over the last year. They were at 16s, and they're back down to 870, so they're basically down 50% on the year. There might be an argument for a dip buy from just getting too beat up. I'm in Disney right now. I've been in Disney for... Again, people made fun of me when I bought Disney at $85 and $90 a share. So many people made fun of me just from political bias. But like, I love buying Disney. And anytime Disney hits cheap prices like $85, $90 a share, I scale in and I make money on it. And again, I have... Anybody that has been watching me long enough understands that I do that with Disney. And again, the haters get really quiet when it bounces back too. Like, I had so many people making fun of me for this Disney trade. You know, I got in at like 85, 90 bucks, and when it dipped down to like 80, so many people came here making fun of me. They're like, how's your Disney trade doing, bro? Ha ha ha. It's like, dude, y'all have such narrow-minded, like people have such a short, like, outlook. You know, you have to understand, regardless of what Disney does short term, they're going to have new Star Wars movies come out. They're going to have new movies and new things that come out that make people optimistic about Disney. And so when it dips down to freaking $75, $80, $90, I start to load up size. And again, it bounced back to 110. I took most of my size off, but I'm still holding a piece of it. And I've been holding it for a long time. Lower PCE is typically better, but it's not super definitive, I would say. It's not super definitive. Palantir at 2450s, 2450s. Bitcoin at almost 64,000. Will Bitcoin go to $250,000 this cycle? What do you guys think? Again, we got about 1,000 people here, guys. About 1,000 people here. Yesterday, we broke 128,000 subscribers. 128K. We're getting up there, too. Over the last month, we've had almost 500,000 views on this channel. So, hey, thank you so much. I appreciate it. We'll see what happens. SPY, Nvidia. Let's put Tesla up here as well. We're in Tesla also. Tesla up to over 200s. Let's see if that can hold also. 89K, then correction, 100K Doge. Can you talk about PCE? Yeah, PCE is the personal consumption expenditure. It's what the Fed uses to gauge inflation. It's a more accurate view of inflation according to the Fed. And so, yeah, that's kind of what's going on. PCE today. Big report. We also have jobless claims unemployment filings dropping today as well, right? So we still got 20 minutes or so until this report comes out. The reason we get thousands of people here is because we cover this data incredibly quickly. Hey, bud. Love you, man. How you doing, bud? You doing okay, man? Love you, buddy. Bye-bye, bud. Bro, they got this dancing video on Twitter of all these girls dancing. It looks to be obviously a Mardi Gras dance. Y'all leave Louisiana alone, okay? That's how we act in Louisiana. Don't get mad at us, okay? That was the culture we grew up in, all right? Y'all are mad. People are mad about people dancing now. I mean, come on now. Find something else to be upset about. John, your channel has gone a long way in the last couple of years. Awesome to see your success from hard work. Hey, thanks so much, brother. I appreciate it. Yeah, we've been growing a lot, man. It's been fun. I used to think 300 people was a good like view count. You know, now if we get less than 1,000 on these big streams, but today we'll have over 2,000. I'm gonna put it out there. PCE drops. We're gonna have over 2K here live. It's almost certainly Mardi Gras. Again, y'all don't understand. I'm from Louisiana. Okay. Louisianians like me, when we were teenagers, Mardi Gras is a big thing. It happens in January, February, March. Typically what you do for Mardi Gras is you wake up super early and day drink and throw a big party at like 8 a.m., 7 a.m. All right. People drive through in what's called floats, Mardi Gras floats. People stand on top of those floats and throw beads out to the public, And so your job is to collect the most beads that you can, flex on everybody with all the beads you have. And, yeah, you basically stand around, get free beads and, drink with your friends. Throw a big party early in the morning or sometimes late in the afternoon. Baton Rouge has like South Downs, which is in the evening. And then what's the other one in the morning? Oh, I'm drawing a blank. It's been so long since I've been to them. South Downs, and there's a morning one too that's big. They do the same thing for St. Patty's Day. How does one go about earning more beads? Well, it depends on who you are, bro. If you're a girl, I mean, it's a pretty easy job there. If you're a guy, you basically just gotta yell, Maybe I would always try to like find the girls throwing beads and be like, hey, what's up? Throw beads. But it just depends. King cakes. Yeah. All right, guys. Hey, we got 15 minutes. 15 minutes before PCE data drops. Jobless claims numbers as well. Some people day trade, some people day drink. 500-point rally from the bottom. Hey, put it out there in the world. I'm for it. Let's let it happen. The Bears are going to be big mad if that happens, though. All right, Tesla, break it down under the previous closing price. Hey, yes, sir. New Orleans in the house, huh, Nick? What's up, man? Appreciate the support, dude. Y'all hit that subscribe button if you haven't already. Yeah, I'm kind of bummed out. I didn't hold PA and W. I bought PA and W at like freaking 270s after the dip from earnings. Got scared out of it. Maybe I think I took a little bit too large of size, and yeah, should have held. That thing ended up bouncing back. It's now at 310s, 320s. Thoughts on cigars? Waste of time and money. What's the point of sitting there not even inhaling something and just blowing smoke out for no freaking reason? I don't understand it. Never understood it. I guess if you're snooty and you want to look snooty, and so you're sitting around trying to look cool. The only justifiable reason is to sit around and look cool, Again, outside of sitting around looking cool, I don't know what the purpose of a cigar is. I really don't. You're not inhaling. You're just kind of sitting there. Like, I just don't get it. I just don't get it, personally. And if you do use cigars, don't get mad at me, okay? I'm just joking. partly. Hey, good luck, Caesar. Dude, you don't understand cigar culture. That's 100% true, brother. Listen, I'm not shooting shots at cigar people here. Again, I don't understand it. I'm not a cigar guy. All right. Yeah, but you don't inhale, Joe. You know what I mean? So, like, again, this is coming from somebody like, I was addicted to cigarettes for like 30 years. I finally quit. Not 30. I was addicted for like 20. But still, I finally quit. I don't smoke anymore. And so, I definitely don't understand cigars. All right, guys, what's the number for inflation year over year? What does inflation show up as year over year? Like, what does PCE inflation show up as today? Again, expectations are 2.8% year over year, 0.4% on the month. Personal consumption data is inflation data. And remember, core PCE is the biggest one here. Core PCE is the most relevant one. Remember, core is the big one. The rest are not that big. Core is the big one here, guys. So remember, core inflation data, the most relevant one. What will that data show up as? 2.8% is what's expected. We got a lot of people calling for 3%, 3 to 3.5%, 3.1%. Is it a good time to get in Rivian? I'm not sure. I think Rivian's high risk, high reward. I think it's pulled back drastically from earnings, but I also think that they don't produce enough cars to really make it a safe, long-term, guaranteed investment. So I think it could work out really well, or it could work out really poorly. So high risk, high reward. 3.7 is too high. I don't think it's going to show up as 3.7. Anything could happen though. 3%. It's about flavor. Maybe so. 2.6. Again, this data drops in about 10 minutes here, team. About 10 minutes. Here, this is a little bit late. I'm going to redo this. Really, it's about... about 9 minutes away. So we'll put that up. 9 minutes. Nvidia dipping down to the volume weighted average price though. A quick recap on what? Well, the market pump anyway, it could. No way they get it under 3%. I mean, it's been under 3% for the most part. Hey, Maddie never came in here. Okay. What? Oh, I had the guy make this. Carol's here. I had the guy make this. You know.
I was wondering why my picture was on.
Carol saw her picture. She's like, "Hey, what are you sending my picture to?" I had the guy make this. All right, baby. All right.
Yeah.
All right. Oh. All right. Hold on. Yes.
All right. I'm gonna go to the gym after I get the kids off. Okay. I'm just gonna go. Like I'm not waiting.
All right. That's fine. I guess. All right. All right. That's fine. All right. That's fine. All right. Love you. All right, guys. We're back. Everybody say thanks to Carol. All right, baby. Love you. Okay, we can do that. Hey. To do. She's pretty, John. You outkicked your coverage. Yeah, I mean, I guess so. I mean, this is coming from one of the top 3 most handsome traders in the world right now. So, I mean, listen, you know, I'm not going to say I'm top 3 most humble in the world right now, but I'm definitely top 5. Okay. When do we get the numbers? 8:30. Yeah, can't take any pictures around John, apparently. Yeah, John's about to just throw it on the internet, huh? You know, Carol, that's what she thought when she walked in. She's like, hey, what are you doing? Yeah. Are you guys interested in swinging? No, get your mind out the gutter, sir. Thank you for doing these live streams. The Fed data, appreciate the quick analysis. Hey, thanks so much, man. I appreciate you guys. Hey, we got 6.5 minutes here, team. 6.5 minutes. Maybe top 4. Definitely top 4 and 4 3/4. How will the market react to this data? We don't know. It depends on what the data is. Lower PCE data is almost certain to cause a positive market reaction. Again, lower PCE data is good. Higher PCE data is bad. Higher jobless claims numbers, in my opinion, is good because that's going to mean less people working, meaning less people spending, meaning less inflation problems. But jobless claims reaction is certainly not definitive in terms of direction. All right, so we'll see. Jobless claim numbers drop at the same time in about 6 minutes. Expectations are 210K. 210,000 is what's expected for jobless claims. PCE data is expected at 2.8% year over year and 0.4% month over month. And this is core data. Core PCE is the most important one. Regular PCE is insignificant. Core PCE is the big one that everybody watches and understands. And so watch core PCE. We're going to cover it very quickly. The reason we get thousands of people here for this is because we cover it fast. And so again, we will be covering this data very quickly once it releases. So stick around, hit the subscribe button if you have not already. We appreciate the love. Thanks so much. Yeah, let's get ready. Today is Thursday. PCE data dropping at 8:30 Eastern Standard Time in 6 minutes. 5 minutes, really. Remember, hit the live button next to the play button. You want to make sure you're fully caught up on stream. Love you. All right, snow at 178.40. Snow bouncing back a little bit. People like that make a meet and greet nearly impossible. Yeah, I mean, it's just weird, bro. Especially with like women. Like, you get so many white knights out here. If I say something even partially jokingly negative, they're gonna be like, leave Carol alone, bro, leave Carol alone. And like, come on now, man. Like, no matter how nice you are, she's not gonna go for you, bro. Like, like, y'all stop it. You know, get out of here with that. I can joke around. I hope we have movement today. All right, guys. Bitcoin's still sitting under 64K. Nice guys finished last. Well, you certainly don't want to be too nice. Like, I used to have friends, right? And, like, they would like a girl. And they would go hang out with the girl, and they would, like, wait on them. They'd be like, you want something to drink? I'm going to go get you something to drink. Hey, do you want this? Do you need me to do this for you? Oh. You know, and it's like, look, I'm not saying you shouldn't be nice. But if you're too nice, it's a problem. You know what I mean? And so you got to kind of be, never mind. This is coming from one of the top 3 worst ladies' men in the world right now. Okay? So don't listen to anything I say. All right, anyways, we got 3 minutes here, team. 3 minutes. Yeah, in the end, the easiest way to put it, just make them laugh, bro. Make them laugh. Even if you're kind of, like, playfully being a jerk, make them laugh. Anyways, snow bouncing back. Unity. Yeah, I'm in Unity still. I'm green on it. That's nice. It got up to my average price is 27 something. All right, team. Hey, we got 2.5 minutes left. 2.5 minutes. Those are hard lessons to teach. Yeah, it just takes time, man. You know, once you're married, then that's when you be nice, and you're like, that's when you can be kind. But even still, like, Carol and I were pretty balanced in that, like, she's not gonna push me around. If she does, I'm gonna stand up for myself, and I'm not gonna push her around. If I do, she's gonna stand up for herself. And I think it has to be balanced, at least in that way. Anyways, we got 2 minutes, guys. PCE personal consumption expenditure data coming out in a minute and a half. We got 2,000 people watching the stream, guys. 2,000 people watching. Let's do this, guys. 0.4% month over month is what's expected. Lower inflation data is better. So lower core PCE data is better. Higher core PCE is worse. Jobless claims, unemployment filings also drop at the same time. Remember, guys, hit the live button next to the play button. Make sure you're fully caught up on the stream. Again, we got 1 minute here, team. 1 minute. Here we go, guys. Here we go. PCE data. We got less than a minute. Hit the live button next to the play button. Core PCE expected at 0.4%. Year over year expected at 2.8%. Jobless claims expected at 209 to 210,000. Core excludes food and energy. All right, guys. Here we go. 30 seconds, team. 30 seconds. Will the market go up or down? Remember, hit the live button next to the play button. Make sure you're fully caught up. You can also fast forward it. Put it on fast forward mode. It should help. All right, so I'm going to mute it. Pause this. We got 10 seconds left, team. 10 seconds. This timer's a little bit early. We got 10 seconds here. I'm going to cut this timer out the way. All right, here we go. Nvidia, SPY, and Tesla on the right side. I'm going to put gold up, actually, on the right. Here's gold. And here's the report right here, team. Here's the report. And there it goes. All right, guys. So, jobless claims came in at 215 versus 209,000. Higher than expected jobless claims. Higher than expected jobless claims. The market is so far reacting positively to this. Higher than expected jobless claims. PCE is delayed. It's not out yet. So we're still waiting for PCE to drop. But the market so far has reacted positively to this. Positive reactions so far. PCE data is still waiting for it to drop. It's delayed on everything that I'm looking at. No PCE data yet. All right, PCE data. U.S. consumption adjusted month over month came at 0.2%. 0.2%. And so jobless claims higher than expected. More people claiming to be without work. Market's flying up right now. Again, Nvidia up to 780s right now. 780s. Wow. Market's flying up. Again, U.S. consumption adjusted month over month came in at 0.2%. 0.2%. Craziness. All right, PCE data did come, regular PCE data came in at 0.3% versus 0.3% expected month over month. Again, 0.3% versus 0.3% expected month over month. The market is flying up. Jobless claims 215 versus 209,000. 0.4% for PCE data. 0.4%. Again, 215 for jobless claims. 0.4% for PCE. Again, market's flying up. 0.4%. Versus 0.4% expected. Regular PCE was the one I was talking about. It came in at 0.3%. Again, 0.3%. Jobless claims 215 versus 209, 210 expected. PCE 0.4% on the year. It came in as expected. Jobless claims came in higher than expected here. And again, this made the market rip up here, team. Look at this move. Gold's ripping up. The SPY's ripping up. Nvidia's ripping up. And so again, jobless claims. I told you guys. So again, PCE data was flat. It came in as expected, 0.4% versus 0.4%, 2.8% on the year versus 2.8% expected. Lower than the last year over year, which was 2.9%. Jobless claims is the signal today, though. Unemployment filings came in at 215 versus 209. More people are claiming to be without work, claiming to be unemployed, and that means ultimately less spending and less inflation problems. That's the reason the market's pushing up initially, at least, and a big bounce in markets overall. And so again, a big rip up. PCE data did come in as expected for core, at least, as expected for core. We'll put this up on screen. Again, jobless claims is the big influence over markets, though. Again, jobless claims came in at 215 versus 210,000 expected. Again, core PCE year over year came in at 2.8. And then month over month, it came in at 0.4%. And so we're going to put all of this up on screen. This is all the reports right here, team. Look at the market fly. So initially, a very big bounce. Nvidia shot up to 785s. The SPY all the way up at 506s here, team. 506s. Crazy. Unity's even bouncing back up, too. I think I'm actually green on the day today, which is nice. Tesla up. Unity bouncing back. Palantir ripping up a little bit as well. Should we buy this dip? I think we should on the SPY. Get my limit orders in. There you go. That should work. I missed the dip. You guys heard me. I was like, hey, I want to buy the dip. I tried to. By the time I finally got TAS set up for it, I had to reset it this morning, so I didn't have my order thing set up. But man, I wanted to buy this little pullback. If we would have caught this bounce. It's all good. We'll have to wait for the next trade. We're green on the day in equities at least, so that's good. But I missed the bounce here, team. I wanted to take advantage of it. We're at 2040s, 2045s right now. I like the music. This is why I struggle to understand the market. More people out of work equals great news. Well, you have to understand the macroeconomic situation that we're in, Mikey. So again, let me break it down for you. In 2020, the economy was at risk, right? One of the Fed's tools to combat the economy is something called quantitative easing. It's basically them coming in, buying bonds, expanding their balance sheet. The Fed also cut interest rates almost down to zero. And so when interest rates are lower, the public can spend more money because they have more money to spend because they're paying less in interest rates universally, if that makes sense, right? So what happens when the Fed comes in, reduces interest rates, injects liquidity into the market is that spending picks up. In 2020, spending picked up dramatically when you include stimulus checks. It's what the Fed is dovish when this happens. It means they're trying to stimulate the economy. One of the consequences to that is inflation. Inflation going up is a bad sign. And one of the consequences from 2020's quantitative easing was inflation, right? Prices of luxury goods skyrocketed. Rolex, Louis Vuitton, car prices, everything rose dramatically from that period. So then the Fed pivots to a different monetary policy stance, which is more restrictive, and they start doing the opposite, which is what's called quantitative tightening. QT is what it's abbreviated to. This basically means that instead of injecting liquidity into the market, they stop buying bonds. They start doing it, what's called passive QT. Direct QT would be directly selling bonds, but they're doing what's called passive quantitative tightening. In that period of time, the Fed's raising interest rates to consumers through raising the federal funds rate. When they do that, people spend less. And so less spending is a positive, optimistic thing. Why? Because inflation's rampant and out of control. Too many people spent money over the last 3 years since the quantitative easing and stimulus checks and inflation from 2020 and the pandemic, right? So too much spending was happening. And so in that regard, what the market wants is less spending, regardless of what that means, right? And what that means is less people working means less people spending, means a more optimistic market to inflation. That is why the market is reacting positively to higher people filing for unemployment. More people filing for unemployment is because it means less people are spending money, and that's what the market wants. When inflation's been rampant and out of control, the market wants less spending, and that's what we're getting right now. The market's ripping up on this jobless claims report and PCE data coming in as expected. But again, that means the question is, when do we start cutting rates? When do we start reducing interest rates, bringing interest rates back down? If you want to know when mortgage rates come back down, you got to watch the Fed to see when they start cutting, when they start doing more, when they end the quantitative tightening period that we've been in, the more hawkish Fed. And I don't know when that's going to be. I think inflation is still a little sticky. I don't think we should do so in March, especially. A lot of people are predicting in March. I don't think we should do it. But again, let me know what you guys think. Yeah, all good, bro. Catch my breath. I'm running out of breath here. But no, hope that makes sense. I hope that makes sense. I think it's easy to understand. Like, once you understand the Fed has two fears, right? And their job is to balance these two fears, which are on opposite ends of the spectrum there. One of the fears is recession, depression, too little spending, recession, and depression, right? Too little spending means lower GDP, recession is 2 consecutive losing GDP quarters, right? So one side of the fearing spectrum in the economy is too little spending, which is recession, depression fears, right? The other side of that is inflation. The complete other side of the spectrum is inflation, too much spending. The Fed's job is to balance that. And so the Fed takes appropriate action based off of what is feared in the market right now, what they fear. If they fear depression or recession like 2008, like 2020 in the pandemic, they inject liquidity into the market. They lower interest rates to consumers, causing consumers to spend more, right? But the consequence of that is the other side, which is inflation, right? When inflation is bad, they reduce the balance sheet. They try to raise interest rates to consumers to discourage spending. And when we're on the other side of that spectrum, like right now in a period of quantitative tightening, in a period of a hawkish Fed, more spending is negative right now. So that's where we're going to get more people filing for unemployment today at 215 versus 209 is a positive thing. Why? Because it signals less spending. So I hope that makes sense. Once you start to understand that specific part of economics, everything else makes more sense, right? Everything else makes more sense. Where what the Fed's doing, bonds and the implication of bond prices, all that different stuff, it just starts to make more sense when you understand the two sides of the fearing spectrum of economics. Anyways, the snow stock is now dipping down. We're still green on that one, though. Unity dipping down a little bit as well. Bitcoin bouncing right at the 200 EMA volume weighted average price. Hey, and thank you so much for the donations. I appreciate it. I see a couple people donating, Mike and somebody else. So thanks so much. I appreciate it. The other thing to take from all this, guys, is again, listen, when the Fed when the Fed is in a period of quantitative tightening, what's called a hawkish Fed, a more restrictive monetary policy, when they're trying to push the economy down a little bit to discourage inflation, right? When the Fed is in that period, again, quantitative tightening is a relatively new thing, a new policy for the most part. It hasn't been around that long. In theory, it should discourage stock prices. So you got a lot of people that are like, hey, the market doesn't make sense. The market doesn't make sense. But again, the market is about mass psychology, and sometimes it's nonsensical. And so even though we're in a period of quantitative tightening in which the Fed is hawkish, they're trying to push interest rates and discourage spending, the market's still been ramping up, breaking highs. And that's why you have a lot of people who are like, yo, this doesn't make sense. This is nonsensical. It doesn't make sense, right? But what you have to understand is that the economy and the stock market is a different thing. Like, they're two different things. They might be indirectly related to each other, but they're different. They're not going to move in easy, predictable correlations, okay? Because sometimes, like right now, you have sectors in tech going crazy. You have this tech boom in AI and microchips, right? And that's propping up the stock market, even though we're in a period of time with super high interest rates, with quantitative tightening, and with a hawkish Fed. All right, so just because the Fed is hawkish doesn't mean the market has to go down, and vice versa. Just because the Fed is dovish doesn't mean the market has to go up. And that's the part to understand as well. It's not always definitively predictable, I guess is the easiest way to put it. Like, it's nuanced, it varies period to period. And again, remember, QT and QE are relatively new things. All right, Palantir moving up. Bitcoin rising up almost to highs. So Bitcoin is rising up here. Let's put Bitcoin up. Here's gold on the right. Bitcoin still up to 63.6 thousand. And y'all hit that subscribe button if you haven't already, team. Hit the notification bell. I appreciate it. I mean, this is a pretty big reaction. The SPY ripped all the way up to 507s. The lifetime highs at 510s on the SPY. So, I mean, we're not that far away from lifetime highs. Look at Bitcoin rise, though. So Bitcoin's getting closer and closer to those highs as well. Who's talking about Nvidia, Keith? Good amount of viewers today. Hey, thanks, man. Yeah, I mean, we get a lot of people for these economic reports. Nvidia, we had freaking 14,000 people watching that Nvidia stream, concurrent viewers. We almost got 100K views in a couple hours in Nvidia, so that was fun. I mean, Nvidia earnings were chaos, and I'm optimistic. I want Nvidia to go up. Yeah, this playlist is copyright-free music. I've had this playlist for years. I've built it slowly over years. It's a lo-fi playlist mostly. All right, we wanted to buy that dip back here. We missed it, and we've ripped up big from then. We're going to start day trading as well here, so stick around. We are going to be day trading. All right, so look at Nvidia rip. Let's see if we can get back over 800. AMC earnings yesterday. I'm in AMC. I think the earnings call was optimistic. The earnings were good. I still think movie theaters are in for a struggle over the next few years as people get used to the different options they have in movie theater studios being more greedy. I think studios are just ultimately less risk tolerant right now. You see it with specifically seasons like House of Dragon, the Game of Thrones prequel. The first season came out, and instead of beginning production on the second season immediately, they instead waited for the first season to completely finish before they greenlit the second season, right? I think, or they at least waited for a couple episodes to actually go live before they began production or even greenlit the second season. That is causing periods where you have to wait years in between shows coming out because, again, studios in general are much more risk averse than they were 5 to 10 years ago. And so overall, I think all of that contributes to more issues for movie theaters and movie studios and the movie industry in general. Not studios. Studios, again, more risk averse, but yeah. Do you have a channel that's for working professionals? What do you mean? What kind of working professionals? How impactful was Chicago PMI at 945? Not super impactful. Why more risk averse? I mean, their margins are probably down a little bit since less movies. You see less movies going out to theaters as well because they have to do press runs, and that's ultimately more expensive to put movies in theaters. And so if the movie's not worth it, their margins are better going direct to streaming, which is something that you've seen change. It's one of the reasons AMC is struggling so much since movie theaters pivoted to that type of business model more so, right? So there's a lot of reasons behind this, but ultimately it has to do with what was sparked during the 2020 thing with remote work, with direct-to-streaming movies, with movie theaters getting less traffic and stuff like that. We're still kind of feeling the effects of that, especially AMC and companies like it. Snowflake bouncing back up again. Hey, over 180s. Palantir bouncing. So we do see some AI breaks. Nvidia just broke highs of the day. It's up to 788. I think this is highs of the day. Yeah, so Nvidia just broke highs of the day. The high of yesterday is right here. Let's see if we can break that. 789s. So we're getting close to the high of yesterday as well. So Nvidia's starting to run. Dragging the SPY up with it. Bitcoin's still up there as well. We could look at like the Q. Q's flying up with all this stuff as well. So again, inflation data coming in optimistic for markets. At least that's how they're interpreting it. Bro, Cher doesn't have a wrinkle on her face, bro. She's got to be, I mean, Botox to the gills. I'm not even mad, bro. Listen, I can't judge. All right, like I'm in my 30s. Okay, if I'm in my 40s, I'm gonna be TRTing it up if my test goes down. You know it. I'm gonna be Botoxing as well. I'm sure. You know. Don't judge me. I can't judge. I really can't. If it makes you happy, you know. Coinbase is crashed yesterday with users reportedly showing a $0 balance. What's going on with Coinbase right now? Is there problems? Coinbase back up to 206. Did it rebound from the crash? Texas homes are starting to lose value quickly here. Might be time to buy. Yeah, so again, home prices are decreasing fast. I'm okay with that. I think they need to come down, to be honest here. I think they need to dip. Nvidia down to 780s. The SPY just a huge run up to 508s. 510 or so is the highs here as well. Isn't that the first move is the wrong move? Nothing's definitive though, Green. Like, a lot of the time the first move is wrong, but it depends on how strong the first move is, right? Like, nothing's definitive in that way. I wish it, again, it's kind of like earnings. And I say this 1,000 times throughout the year, but I'm gonna say it again. People act like earnings are a definitive reaction. You know, I wish it was, because again, it would be so easy to make money if that was the case, right? Think about how easy it would be to make money if you could just sit around and wait for a company to report good earnings, good EPS, good guidance, and then just buy it. Wouldn't it be so easy to make money? You just sit around waiting for a company to drop good results and click buy, and boom, you make money, right? Unfortunately, it's just not that easy. And a lot of the time, a company will have good EPS, good sales, good guidance, and drop 15%. You know, and so it's just not that simple. Again, same thing with these economic reports. I would love to say, hey, the first move is always the wrong move. If that was the case, first move up, I'm shorting it. First move down, I'm buying it. But it's just not definitive. Sometimes it's like that, but it's super nuanced, not very predictable. And again, the best thing to do is just try to react to it and try to find an edge there. But again, it's not always the case, which I guess it's not definitive. I wish it was. Again, if it was as easy as that, I'd sit around waiting for a company to drop good earnings and just buy, click buy, profit. You know, it'd be a money machine. You know, unfortunately, companies can have great guidance, great earnings, and drop 10%. You know, companies can have terrible guidance, terrible earnings, lose money for the whole year, and go up 15% on their earnings report. So again, super nuanced. A lot of the movement happens preceding the earnings report. So like people are getting baked into potential outcomes leading up to the earnings report. So when the earnings report drops, you get profit taking, just volatility in general. Yeah, the trend is your friend. Yeah, I mean, BYND, I'm super sketched out as a company. Again, the problem is it's lab-grown meat. And vegans are just not about to play that game, I think, you know. Like lab-grown meat has to have a very small body of interest from consumers, no? Like how many people actually want to eat lab-grown meat regularly? I can't imagine it's very big, right? The consumer base has got to be tiny. And so a company like that, like I remember saying this back when this thing was hundreds of dollars in value and per share, and now it's at $9. And this is high versus what it was. You know, it was $6.50 a couple weeks ago. So, I mean, again, I'm just not a big believer in companies like Beyond Meat. I think they're overhyped. I don't think they have the consumer base they need to succeed long term. And I don't think vegans are going to buy this. You know, I think vegans are incredibly health conscious. If you tell them they have some weird lab grown meat, they're going to say, nah, bro, I'm good. And so I think you have to look at it with that lens in mind. Like, are vegans going to buy this? I don't think they will. When you add that, it's pretty expensive on top of it. Yeah, drink every time I say nuance. You're gonna be hammered within a couple hours. Or bro, or you know. Those are my filler words. Yeah, I actually like the Impossible. I actually like the Impossible meat. I went to Disney World years ago and ate the Impossible tacos. They were pretty good. As much as I hate to admit it, they're pretty good. The problem is that if I have the option of regular tacos and fake lab-grown meat tacos, I'm going to go with regular tacos every time, you know? And so that's another problem with their business model as well, is that non-vegans and vegetarians, they're just going to eat regular meat, right? So you basically only have vegans and vegetarians. And I don't think they're going to go with lab-grown meat. I just don't think they're going to do it. I think they're too strict in regards to their diet to go for that. Yeah, the problem with this dancing video of all these girls dancing during Mardi Gras, the problem is you see people that are like, yeah, you could have a great time partying with them, but were these the types you were looking to get serious about? The flaw in their thinking is like, bro, during Mardi Gras in Louisiana, okay, everybody goes out and parties like this during Mardi Gras. Like, my grandma did, my aunts did, all my cousins did, literally everybody. They could be a party animal, or they could be my cousin who is super like conservative and you know, goes to church and all these different things. Everybody's party during Mardi Gras, okay? Everybody's going out having fun during Mardi Gras, all right? Again, this is coming from people that don't understand Louisiana culture, to be honest, that are criticizing the dancing video, just coming from people that don't understand it. And people might disagree with that. You could dislike Mardi Gras, but again, don't go to Louisiana then during Mardi Gras. Speaking of king cakes, I love king cake. Where's it at? I gotta get one. Reality Shack, what happened to PCE doubles again next month? Doubles, let's see. PCE last time, you gotta look at the year over year amount, right? Like, you can look at month over month, but whenever we're talking about 0.1%, it's pretty easy for it to double, right? When we're talking about 0.1%, that's a little bit of a misleading thing, okay? You have to look at the year over year gauge, right? Last time it came in at 2.9% year over year. This time it's at 2.8%. And so it is an improvement in a slowing down relative to the previous longer term look. Short term, month to month, I mean, again, relatively insignificant. Yeah, I'm from Baton Rouge as well. Yeah. A lot of people haven't been to Mardi Gras and it shows. Boudin? Yeah. I miss my Louisiana food. I'm in Texas, so the food here is, you know, it ain't that bad, but I miss my Louisiana food for sure. Yeah, you know, Paul, I see a lot of these experts, bro. Like, I've had people that I know that just kind of hang on every word that these experts say, and I always tell them the same thing. Like, again, I'm going to go back to this, okay? The Dunning-Kruger effect in terms of economic releases is very, very true. Okay, so if you see somebody that claims to know for sure what the economic data is going to be, ignore what they say. Okay, if you see somebody that says for sure they know what these economic reports are going to show, again, walk away from that person because they have no idea what they're talking about. And the Dunning-Kruger effect is 100% true in a lot of trading. Which, what I mean by that is the Dunning-Kruger effect basically means that the people with the least amount of experience in something think they know it the best, right? And the people with the most amount of experience around something typically understand how little they know, right? And one thing that experienced economic and traders, are very consistent with is that they don't know what's going to happen. Nobody knows what's going to happen. Nobody knows if the data is going to come in high or low, or unless you got insider information. You might be able to guess correctly, but nobody freaking knows. And so the people you see in the chat room being like, the data is going to come in like this, and a lot of the time they shame other people who might think differently or have different guesses and different predictions. Again, those are typically people with the least amount of experience because they haven't been around it long enough to realize how difficult it is to predict. Once you watch a couple of these reports, you recognize that it's incredibly difficult to predict, and a reactionary mindset is probably better. Yeah, and I think a lot of these big time YouTubers have been calling for a market crash for the last few years. And again, they do it because it gets them more clicks. A lot of it is political bias as well. Again, I'm neutral politically, but if you dislike a current administration or whatever, it might be confirmation bias and saying, oh, well, the market's going to crash under their watch. And that might be what people want. And I think if you watch the news a lot, the news's job is to get clicks. And so the news is going to act like the sky's about to fall constantly. And maybe we do eventually crash. I don't know, right? But I think there's a lot of people with that type of bias, especially like big influencers and YouTubers. A lot of them have posted a crash was going to happen every 2 weeks for the last year and a half. And again, the market has had one of the strongest years it's had in a while. Last year, it went up 24% on the S&P. So a very, very strong year last year. But a lot of people and a lot of big YouTubers discouraged retail traders from taking advantage of it because they told the market it was about to crash way back here. They said here that the market was going to crash. Way down here, they said it was going to crash. And now look at this huge year that we've had. And so again, that's where a lot of the emotion comes from, is that they've just been wrong. And again, they do it to get clicks. If I tell everybody the market's about to crash, I probably get more people showing up here than telling people, hey, nobody knows. So it just depends. 100% Larry, exactly. The more you learn, the more you realize how little you know. This might be the one channel on my feed that doesn't constantly have flames in the thumbnail. Hey, diversify. Have some balance here. Watch beginner trading. I like you. You're modestly intelligent and informative. Definitely top 3 smartest people in the world right now. If you don't have me on your top 3 most smartest people ever, you're making a mistake. Humility flows through me like water here, guys, And if you didn't hear the sarcasm in the most smartest, which is obviously wrong, don't get too mad. Don't get too upset. BYND bouncing back up. It's almost up to 950s here. I'm still in SNOW. There was a certain YouTuber that I stopped watching because he would scream market crash every other day, even when the market was breaking highs. Yeah, again, I think in trading and especially economics, you can't be so rigid. Like, you have to be flexible. Like, you have to be willing to admit you're wrong and adjust outlook. Because if you stay with market's going to crash, I'm never wrong. Again, it comes from a lack of experience in markets. A lot of people went from day trading to economics, right? And so they don't really understand economics or what the history is with stuff like this. And so they rushed knowledge too quickly. And remember, this is coming from somebody who I have no idea what I'm talking about, and I'm terrible at this stuff. But people just rush into it. And I think, again, I don't think the market has to do anything. I think anything could happen. You're a legend in your own mind. Oh, for sure. Definitely legend, I would say I'm a hero in my own mind. Understanding bias will help you make better decisions. Yeah. Hey, thanks, James. Definitely my top one. Definitely for sure. Look all green watch list. Yeah, Varen. Sorry, bro. He says, check out this crypto token. Not right now, brother. You're very humble, and I love that. Oh, definitely. One of the most humble people in the world right now, for sure. The market will remain insane longer than you can remain liquid. Yeah, the quote is something like the market will stay irrational longer than you can stay liquid. Very true. Yeah, I think the market, you know, the last time in 2020 when the market crashed, right? Not crashed, it was kind of more so of a correction. We bought up a lot of stuff, and it kind of goes to show the market's so polarized sometimes. When we bought up a lot of stuff in the middle of 2020's crash, right? So we got this little, it wasn't a crash, it was more of a correction, but we had this right here happen in 2020. I made a bunch of videos and bought up a bunch of stuff. I bought up MGM, I bought up United Airlines. I bought up United Airlines at like 20 or 25 bucks if I remember correctly. And again, I made a video about it on another channel that we had, and bro, I just got shamed for buying United Airlines, and I bought it up at like 20, 25 bucks, like way down here, and I just got made fun of to no end about it. Over the next few weeks, it ended up ripping up huge percentages. It ended up ripping up like 100% by later that year. It was up 100%. And again, crickets from the people who told me it was a terrible investment. And so I think some of my best trades are trades in which people make fun of me for taking them. Like I bought Target up earlier in the year. You know, Target was in the middle of all the controversy or whatever, and then it dipped down a lot. Like Target had dropped down to $100 basically. I bought up Target around there, and everybody shamed me. Everybody made fun of me. Target ended up ripping back up to 130s within a month or two. I did the same thing with Disney. Again, I talked about this earlier. Every time Disney dipped down to 80, 90 bucks, I buy it up. And so many people made fun of me and told me it was, every time it dipped down to 78, people would message me and be like, hey, how you feeling about your Disney trade, bro? Now Disney's at 110 and it's crickets from those people. I did the same thing with MGM back in 2020. So again, sometimes people are going to make fun of your positions, and I think you got to learn to just tune people out. I think you could listen to people, but some people, for whatever reason, just hate specific stocks. And I think you can't hate or love specific stocks. I think you have to stay flexible and unbiased. And again, I think the easiest part is like, don't take positions that you're going to be super emotional if you lose on. Take positions that you're okay with losing on. With that said, though, look at Snow bouncing back up. We bought Snow. Our average price is 173.20. It's up to almost 183. So we're up like what, like 5%, 4.5%, or no, over that. We're up like 6%. What's the percentage there? It's like 6%, right? Something like that. Let me see if the math in my head is correct. From 173 to 183 is 5.8%. Hey, look at my mathematics in my head. Top 3 mathers in the world right now. But yeah, Snow is up to 183.30s. We bought the dip after earnings yesterday, so we didn't buy it pre-earnings. We bought it after it dumped down to 170s. Bought that up. We're riding it back right now. You'll love to see that. Here's Snow. Up to almost 183s. Huge dip from earnings. These are some of my favorite trades too. I think with my personality, this works well for my trading style. Like I usually just wait for earnings to have massive percentage drops, buy it up when they're down a huge amount and ride it back. I did the same thing with Salesforce yesterday as well. If you guys remember, I did it with CRM. This was a much quicker trade. It completely filled the gap down. It dropped all the way to 270s, bounced all the way back to 300s. So this thing bounced back 10%. Not quite 10%, but yeah. Or no, about 10%. This thing bounced back basically 10% in extended hours. And we didn't ride it back. We sold when it was at like 290s. So we ended up making money there. We've done this a bunch of times really over the last few years. But yeah, look at Snow. Delta as well. We're up a lot on that too. Yeah, I'm in SOUN as well. It has earnings today also. Yeah, it's up to almost 7. B says, this community is super helpful. My third stream, and I've learned more here than all the other vids I've watched. Thank you. Hey, we appreciate it, B. Thanks so much. Yeah, I was skeptical of Tesla at 100, though. Laguna, Italia guy. I was skeptical there. And so I can't really say much. When, again, the problem with me, and I'm in Tesla right now, I'm bullish on it long term. I think Tesla optimism, for me at least, comes from, I think full self-driving is the future of automobiles. I think cars are going to be driving themselves within the next 20 years. And I think Tesla has positioned itself on the forefront of that, right? So I think when full self-driving is adopted, Tesla's at the forefront, and I think that's going to completely fundamentally change automobiles and driving. And I think that's an inevitable thing. I think it's going to happen sometime in the next 20 years. And I think when it does, Tesla is positioned to do really, really, really well from that. I don't think there's any other competitors in that way. Maybe some of the other big brands, but I think Tesla has positioned themselves really well for that. We just don't know when it's going to happen. We don't know if it's going to be in 5 years, in a year, in 10 years or more. And so I like Tesla for that specific reason. I didn't like Tesla when it was at $100 because it was in a period of incredible risk. Like Elon, I think one of the problems and risks of it, if I'm being honest, and again, I don't have to agree with you 100% if you disagree with what I'm about to say, but I think Elon's being too outspoken on social media. And I think anytime you sell things to consumers, you need to kind of be neutral. You can't be super controversial and polarized politically because it, half of your consumer base might swing towards the other side of the political spectrum. And so if you're super controversial, pushing for one specific side, I don't think it's good to sell things to consumers in that way. And I think it's going to dry up business for those consumers. And so I think if you're selling things to the public, you have to be neutral in that way. And that's something that he definitely hasn't been. And so I think that's the risk for Tesla there. But even still, I'm still optimistic regarding them. Yeah, I'm in Tesla right now. I've been in Tesla, though. I've been holding it for a while. I'm probably going to take a little bit more off of Snow just because I can here. It's up enough to justify it. Alright. Yeah, Mara is interesting as well because Mara moving with Bitcoin testing highs, lifetime highs for Bitcoin. Bitcoin almost up to 65K. Lifetime highs right around that spot. Look at the Q break highs as well on the right. Nvidia is still up there too. All right, remember, we're going to get ready to day trade at the opening bell as well, team, so be ready. We're going to be day trading live. Futures. So again, we're getting ready to trade our funded account program on Top Step. Again, we also have SOU in earnings. Again, we're going to get ready to trade futures, so stick around here, team. PCE data is definitely getting more people interested in it, though. I can't remember. PCE data is out. It might be right here. I don't know. I hope it does. We're going to be streaming earnings today for Sound. All right, guys. Again, we're gonna get ready to trade our futures funded account program. Running into a little bit of lag on Top Step, Quant Tower. Hey guys, I will be right back. Listen, it might lag the stream for just a second. Okay, for just a second, it might lag the stream. And so if it does, stick around. We're going to be right back. Okay, right back. All right. Can y'all hear me? Maybe it didn't lag the stream at all. The problem is that I didn't have my Ethernet cord hooked up. But I think we're good. Are we connected? Are we here? We should be good. You good? Okay, good. No, I'm in shares. When does the Fed cut rates? Let me go ahead and end this poll. We got over 2,000 votes. So again, let's go ahead and ask, when does the Fed cut rate? March, May, June, or July plus? That's the question. When is the Fed cut? All right, guys, so we are trading our Express funded account here. Here's the NASDAQ. We're going to try to day trade this at the opening bell. There's AMC's earnings report. Let's cut this out. Put this 3 charts down. CRM still trying to make moves. I'll put 2 charts up actually instead. Palantir dipping down. It looks like taking some out of Snow was the right move. SoFi is actually green as well. You know, I'm in Delta. I feel like I should probably take some more off of Delta. Delta's moved up a lot. Hey, thank you for the donation. I don't know how much that is, but thanks so much. Let's check, I guess. Appreciate the love. For that $7.50 donation, thank you so much. I appreciate it. Alright, so again, we got a little dippy here, a little dipperoo. Top 3 dippiest dips in the world right now. I don't feel like anybody hacking into this. I might buy this dip. All right, we got 1 contract of the NASDAQ here. Let's see if we can make a quick little gain from this. This is my funded account on Top Step. All right, slightly green, flat. Definitely top 3 in the world right now. We're gonna go ahead and cut that. We just made $40 day trading the NASDAQ here. These are trading futures. The Fed said that their base case was that they were going to cut rates this year. Okay. So the Fed is saying that they're probably going to cut rates this year. Now, we don't know when it's going to be. I think a lot of people are predicting March, which is way too early. It's almost certainly going to be, I'm going to go with June is my guess. But I don't think it's going to be in March. I think that's way too early. But the base case, according to the Fed in the last FOMC meeting, was this year. Now, that could always change, and it does change a lot, but base case was this year. Quantitative easing, Kimberly? QT? People are going to be drinking a lot if that's the case. Yeah, Josie said she felt bad. You had to explain it. It's all good. That's what the channel's for. I think one of the things people come here for is because we explain economics in an easy to understand way. I think people hear the Fed and they hear QT and they hear QE and they hear bonds and rate hikes and dovish and hawkish, and they don't really understand what it all means. And so we try to break it down in an understandable way. And I think that's why people tune in. PCE or unemployment, which has more volatility, PCE does. I mean, I don't know, chat. Do y'all like the fact that I explain economics in an understandable way? I don't think 3 cuts this year. That's definitely not the base case. Yeah, I certainly don't think it's going to be 3 this year. Again, that's certainly not the base case. I think maybe 1 or 2, but I don't think it's going to be 3. 100% yes? Okay. Yes, I've learned a lot. Yes, I do. Yeah, for sure. I figure that. Again, it can be really intimidating. There's a lot of like financial and economic jargon that makes it more intimidating. Again, in The Big Short, they describe this as they use a lot of big words and they do it intentionally so people leave them alone and don't try to get involved with economics or markets themselves, right? There's a lot of big jargon, quantitative easing, quantitative tightening, rate hikes, federal funds rate, technical analysis, there's just a lot of different trading in economic terms, hawkish, dovish, that people find confusing. Again, when you understand the 2 different sides of the fear spectrum, which is recession and depression fears, economic weakness, less spending, too little spending, that's bad, right? Anytime you get too little spending in an economy, it's a bad sign. If you get too much spending, it's a bad sign as well for different reasons. Too little spending means depression, recession risks. Too much spending means inflation risks. The Fed's job is to keep it in the middle, and they have tools to combat it on both sides. One of the tools to combat too little spending is quantitative easing, injecting money. Basically, the Fed goes out and buys a bunch of bonds. That it ultimately trickles into interest rates going down. It trickles into the public having lower interest rates, and so they can spend money on other things and increases spending. Too much spending causes inflation. Inflation is bad. The other side of that, the Fed can raise interest rates to consumers by raising the federal funds rate. They can stop buying up bonds, or they can do direct quantitative tightening, which is selling bonds, reducing their balance sheet, raising interest rates to consumers, and ultimately stopping the public from spending as much and lowering inflation, right? Those 2 sides of it are what the Fed is constantly in charge of watching. And once you understand that part of it, everything else makes sense. Like what the market fears, how the market reacts to economic data, it all starts to make sense in that way. Yeah, where good news is good news. Yeah, that'll probably happen when the Fed pivots to a cut rate and ends quantitative tightening. Passive quantitative tightening is what they're doing. Sure, you know more than I do about economics. I focus mainly on commodities, supply and demand. Yeah, I mean, it's all related, though. Commodities, futures, bond prices. They're all related to the economic machine, which moves everything, you know. Yeah, again, like I said earlier, the economy is not the stock market. That's why people are upset that the market's breaking highs during a period of quantitative tightening. And again, the economy and the market are two different things. The market can break highs in the middle of a quantitative tightening and hawkish Fed with high interest rates. It certainly could happen. We see it right now. Why? Because the market's not based on action. Number one, it's not based on fundamental health purely. It's based on psychology and interpretation of fundamental health is the first thing. The second thing is that you can have independent sectors pop off. Like right now we have AI popping off that drag the market up even in a period where the economy is struggling. It also happened in 2020. Like the market was breaking highs in 2020 and people were saying, hey, this doesn't make sense. Like, look how bad the economy is right now. Why is the market breaking highs? And so it doesn't always have to make sense in that way. And so that's the thing. The stock market especially is a different machine. That's based on a lot of other things, you know. Can you comment on Roku? I don't like Roku as a company personally. I'm not saying it's not going to succeed. I just don't invest in it. My argument against it is simple. It's too replaceable in terms of technology. You know, these TV companies are going to start producing their own versions of Roku, and they already are to a certain extent, that just consolidate sign-ins and login information. And so if these TV companies can replace the software of Roku, which is now mostly a software company, people don't really buy hardware because hardware in general is starting to kind of get phased out with technology growth. But anyways, Roku is replaceable. These TV companies, say Samsung doesn't want to have Roku on their TV. They want that data because data is king for these software companies. So they want more data. How do they get more data? They create their own version of Roku, and they farm data through their own software, and that software is going to be relatively cheap to create. It's not going to be expensive, especially if you have budgets like these big TV companies. And so I think something that we're going to see over time is these TV companies are going to slowly replace Roku more and more until it's phased out completely. That's my guess. Again, if you disagree with me, it's okay. And again, I could obviously be wrong here. I could certainly be wrong. I'm not saying I'm right. That's just my reason for not investing in Roku. And again, maybe I miss out on some growth. I'm not sure. I don't personally like Roku because of that. Can you say the same thing about Netflix though? Netflix is a completely different thing though. Netflix is a streaming app, arguably the largest streaming app right now. And so there's a difference between an actual streaming app and something that consolidates streaming apps. Something that consolidates streaming apps is very replaceable software-wise, especially, okay. And again, I'll try to go through this quick. When the internet first came out in 95, right, you had a company called Netscape. It was the first browser company that really gained notoriety, right? But this was before browsers came standard with TVs or with computers. And so you used to buy Netscape at home, and you would get home, you would download it to your computer as a browser company. It would show you how to get to different places on the web. Netscape changed the system of IPOs, where prior to Netscape, companies didn't IPO until they had a couple years of net profitability. Netscape changed that and IPO'd before it was really showing a couple years of profitability, and it made billions and billions of dollars in its IPO. It fundamentally changed how companies IPO. Now they IPO much earlier, partly because of Netscape changing the game for that, right? Anyways, eventually Microsoft wanted to either buy out Netscape or at least buy a portion of Netscape or partner with them. And Netscape said, no, I don't want to work with you, Microsoft. And so eventually Microsoft and Netscape had this competitive battle. Microsoft eventually started including its own version of Internet Explorer with Microsoft operating systems for free. And so instead of people having to pay for Netscape, they got a free version of Microsoft Microsoft's Internet Explorer with their computer. So Netscape went from being worth billions of dollars to very quickly being worth a couple $1,000,000. I think it was bought out by AOL within a few years for only a couple million, when it was worth billions prior to that. And so I think we can see a similar thing eventually with Roku, where these companies are not going to want to work with Roku if they can create their own version of it for free with the TVs that they're putting out there. Okay, so just to go back to that, I think that is the risks for Roku. It's a very similar Internet Explorer, Microsoft, Netscape dynamic where these companies can do their own version, right? And again, maybe I'm wrong. I could be wrong. That type of vulnerability is too much for me to get involved with it. All right, guys. Hey, we got 1 minute here. 1 minute. All right, market's about to open. We got less than a minute here, team. Less than a minute. It is almost 8:30. Do we have economic data coming out around 10? We got Chicago PMI, relatively insignificant. I mean, expectations are 48.1. The lower under 50, the more contracting manufacturing sector. So slight contracting manufacturing sector predictions for the expectation of Chicago PMI. Coming out at 9:45. This is not a huge release, though, but we'll cover it nonetheless. Sorry, Pawn. I haven't even pulled up Discord, brother. The NASDAQ has a very sideways trend here. Very sideways trend. We did make a little bit of money so far in our account. Alright, there's the opening bell. Alright, so Nvidia ramping up at the open at 790s. All right, so NASDAQ just broke highs right at the opening bell. Apple ripping up. Nvidia is still pushing up almost to 800s. Look at the NASDAQ run. Yeah, we're up about 40 bucks. I'm gonna let things settle down a little bit. It's a tad bit too risky for me to want to get involved. Finally got a little dip. All right, we bought this little dip. All right, so we just made about 100 bucks really quickly on our funded account. We are up about 130 on the day. Goal is to build up a cushion first, and then we can take larger risks with that cushion. Instead of having big drawdowns if we're wrong, we can have small drawdowns and flat days if we build up a cushion and lose. right, NASDAQ down to 18K. Nvidia at 790s. So Nvidia started to break down. If Nvidia cracks lows, maybe it's going to signal weakness in the market. Super micro, rip it up. Right, exactly, Jonathan. He said, I just got my first Roku TV after years of Samsung smart TVs are using the Fire Stick. Nothing about them is something a smart TV can't do. 100%. It's too replaceable. Software is very replaceable, and when you have the type of reach that these TV companies have, I just think there's risks. All right, so we're breaking up here. We're up to 18K, 18,000. So yeah, McConnell stepped down. All right, look at the NASDAQ breaking highs again. Nvidia reached up a high level, but immediately retraced. Palantir broke highs again today too. Smartphones are replaceable too, but everybody wants an iPhone. Yeah, but iPhones, okay, the difference is that Apple's been around since the 70s. It's a legacy company, as well as like phones are much harder to recreate in a good, in a well executed way. Phones are much harder to it's very difficult to create a good phone with a good operating system. Roku software, not so much. Most developers could create that within a month or two, especially these big TV companies, you know. And again, maybe I'm wrong. Nvidia ripping up over highs. Will it break 800? I might buy this dip, see if Nvidia hits 800. We're in one contract here. We can take a little bit more risks now. All right, so we just made another $30. If Nvidia starts to test 800, we'll buy it back. It's right at $800. All right, we bought this dip again. We will take some more risks here. We are in two contracts. I think Nvidia could make another test. Right back up. Took half off there. Big gain. All right, so we're up about 300 on the day in our funded account, about $300. We'll take that. Bitcoin at 64,280. A little bit more than that, actually. Snow is ripping back up too. Nicely green on the day too. Very large pullback. We're back in another position, one contract here. We're We're gonna take a large position buying these dips. Swing into the cushion that we have on the day already. Lost it. We took a big risk and we paid for it. We're only down a couple, like $100, $100 and something bucks on the day though. So we built up that cushion and then lost, unfortunately. And now we're starting to retrace back. So we can build back up another cushion. 2 contracts here. All right, took half off. I think Nvidia is getting ready to test $800 again. At least it's trying to. I might be wrong here though. Pretty much flat on the day. We got 2 contracts. Snow is ripping up, dude. So that's good for my equities position. All right, so here goes Nvidia. I think Nvidia is going to start testing $800. At least it wants to. Yeah, maybe I'm getting trapped. It doesn't matter. Again, y'all will understand more about what I'm doing today tomorrow. So just bear with me. Pun intended, I guess. Alright, so we're flat on this trade or so. Yeah, I think we're just going to take this risk here, guys. And again, you'll understand tomorrow. Palantir pulling back some. Alright, will Nvidia bounce here at the volume weighted average price? Music is so sensual. Hey, that's what we're here for, bro. Yeah, you'll understand tomorrow, guys. We do have Chicago PMI coming out in about 4 minutes. It's the only hiccup in this trade. I mean, I'm just buying a dip here. Look, I'm going to take one of my shares off. There we go. And ideally, I want to see if Nvidia bounces. I'm trying to give it a little bit longer term of a play here. We're pretty much flat on the day. people do we have here still? 800. All right, guys. So again, we're day trading here. We're in a funded account. I think NASDAQ, we're going to pull back after 8. Baby, I see Apple bouncing up. I see Nvidia bouncing up too. And so I'm really just trying to stay patient. There we go. I'm kind of flat on this. CRM's bounced all the way back. We did make some money in Salesforce also. Very close to cutting it. We're right around the exit level here. I think we have to watch Nvidia too. Yeah, I'm gonna have to get out. So we're down on the day for sure. Kind of a big rip up and a big move down. Nvidia's kind of flat on the day. I wonder if Nvidia is waiting for SOUN earnings. And again, if you're wondering why I'm taking like risk here in my funded account, just again, wait for tomorrow. You'll see. It's about 1 minute. Short's coming down. Yeah, and if you haven't already, check out TopStep. TopStep funded account program and futures. They give you a demo. They test your skill. If you can pass the test, they fund you. If you can't pass the test, you probably would have lost more putting the money up yourself, in my opinion. So we have a Chicago PMI that's out. It came out at 44, lower than expected, showing a weaker manufacturing sector than initially anticipated. 44 versus 48.1. Huh? Did Discord crash? Weird. Freaking Discord. Sorry, I'm dealing with stuff in the background, but yeah, Chicago PMI. Bro, Discord's acting funky. Yeah, we got a pretty big announcement tomorrow that we're going to be talking about. Let me see if we got Cam here. There we go. Here's Chicago PMI. Still sitting tight waiting here. It depends on what we think Nvidia is going to do. Nvidia's at 790s. Did I post my TopStep link? Yeah, if you haven't checked out TopStep, funded account program and futures, remember, I am terrible at this stuff and have no idea what I'm talking about. If you want to check them out, here is the link. Great way to help support the channel. Again, most day traders lose money. These funded account programs limit your risk. And so if you lose, it's not the end of the world. But if you're good enough to pass it, funding between 50 to 150K, the base one, your risk is only $49 a month. If you lose, it's not the end of the world. Once you're funded, you get a 90% split anyway. Day trading futures are very similar to day trading stocks. There's no PDT on futures though, so you can day trade short. They're a sponsor of mine. I'm biased because they pay me money. But if you want to check it out, there is the link. Great way to help support the channel. Yeah, we do have a big announcement tomorrow. It's coming out. I don't like NKLA at all. I think they're kind of sketchy and scammy, personally. See, Nvidia is completely flat here. Yeah, NKLA, aren't they the ones that rolled the thing down? Oh, I still got this thing up. Hey, I guess that's good. Aren't they the ones that rolled the truck down the hill? Right? Is that the same ones? Yes? Okay, yeah, then I don't trust him at all. Where and how did you gain so much knowledge about the market? I mean, I'm not claiming to be an expert or anything like that. I learned most of my stuff just through trial and error and experience. You know, like you learn about, first I learned about penny stocks and then realized that most of them were really freaking sketchy and that the predatory marketing was there. And then you gravitate towards blue chips. Then you gravitate towards index funds and investing. Then I gravitated towards economics, bonds, crypto. Like it's like a snowball effect. You start to learn one thing, you want to learn how it ticks. Curiosity is helpful. So curiosity is probably pretty helpful. Top 3 least experts in the world. All right, CRM starting to bounce back. We're nicely green in equities today, and we're up 4 figures on the year in trading and investing, so that's nice so far. A couple months in. Nvidia's starting to break over these highs. Chicago PMI is already out. It might be right below me on the screen, Philo. Shout out to all the YouTubers that try to sell their audience on penny stocks and how they'll be rich from them. Yeah, man, that's just super predatory. Again, if you haven't already checked out Chart Prime is another sponsor of mine. I'm inherently biased, of course, in their favor because they pay me money. But if you want to check them out, I can't guarantee you're going to make money from them. Nobody can. But again, they're genuinely powerful here. If you look up like Chart Prime and how to use them, they're a custom trading view signal and alert service. So they gave you alerts, custom alerts on TradingView and anything with a symbol on TradingView. So this includes stocks, crypto, forex, futures, anything with a symbol on TradingView, you can use them on. Genuinely impressive. Like if you backtest this yourself, again, I can't guarantee you're gonna make money. Nobody can backtest it yourself, of course. But if you backtest this yourself, you'll realize, like, look at the strong, look at how accurate the strong signals are. But look at this strong signal here, huge rip up afterwards. So it literally called that strong sell signal. We got some dips, buy signal there. You got this bounce follow through afterwards. Look at that sell signal, beautiful drops, buy signal, bounce, strong sell signal, drop. Again, backtest the strong signals. Like watch, we could look at the strong ones. Look at the strong one here. This one you could say didn't work just to be safe. So that's 1 and 1. Strong signal, beautiful breakdown. Strong signal, beautiful breakdown. Strong signal, nice little rip up. Strong signal, beautiful breakdown. Strong signal, beautiful rip up. Strong. This one was wrong. So again, genuinely impressive. Like look how accurate this is. Strong signal, beautiful drop. This one was wrong. But again, when you backtest this, again, let's look at how many were right versus wrong. Let's call this one wrong. Okay, so this one is wrong. This one worked. This one worked. This one worked. So that's 1 wrong. Let's see how many that worked. So that's 1 wrong. This one was wrong. That's 2. This one was wrong. That's 3. This one we can say is wrong. That's 4. That one worked. That one worked. All right, so 1. So 4 out of all of these. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 4 out of 16. That's 75% accuracy. And so genuinely impressive. I can't guarantee you're going to make money with this. Nobody can. But again, they've got oscillators, backtesters, screeners. And again, I can't guarantee you're going to make money. I was against companies like this in the beginning. But honestly, when I looked at them, I was impressed by it. I was genuinely impressed by it. A company called Chart Prime. Again, test it yourself, backtest it yourself. Understand nobody can guarantee any results for anything. And always remember, guys, I'm terrible at this stuff and have no idea what I'm talking about. I'll be back later. Today we have Sound earnings, SOUN, SoundHound AI earnings. We will be back later on today, I think. So we'll be back later on. Y'all be safe. Y'all be good in the markets. If you want to check out any of my sponsors, links are in the description. And yeah, guys, y'all be safe. Y'all be good. We'll see what happens. Good luck. Love you all. Y'all be safe. We'll be back later on. Y'all have a great day.